anyway, I'm Jackie Betts. I'm the city administrator. And Kathy Brucker is our interim finance director. And she actually started with us, just about a month and a half ago, jumped in the middle of doing the audit and has taken over and assisted us, and we'll talk a little bit about that. The first thing we need to do, I guess, is call to order, and we can do the flag salute. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. So if we want to go around the room and introduce ourselves, Drusilla?
I go by Drew.
Drew?
Yes, it's easier. What do we want to
That's all, just your name.
Tanya Moffett.
Kathy Brucker.
Mindy Garlington.
Brian Sutton.
And Neil Reisner, I know will be here, but he's not present right at the moment. So the first thing that you guys need to do is appoint an audit committee chairperson. So is there nominations?
I nominate Ann.
Is there a second?
I second.
Would you accept the nomination, Ann?
Sure.
Okay. All those in favor say aye.
Aye.
Opposed? Okay. Ann, you get to take over the meeting.
Okay. So.
And Tanya will help you.
Then just introducing you guys for the presentation?
Yeah. Okay.
Yep. So I'm Tanya Moffett, and I'm the partner with Marina and Company, and we were selected to do the June 30, 2017 financial statement audit. I'm happy to report that it's an unmodified or clean opinion for the City of Gladstone, as well as the Gladstone Urban Renewal Agency. That's the highest level of opinion that we can give on a financial statement. So that's great. These are, for the City of Gladstone, it is actually a draft in front of you. We have one change that will affect a few pages in here, so we will explain what that is here in just a few minutes. But for the Gladstone Urban Renewal Agency, that one is a completed copy, and there will not be any changes to that. One thing I would like to point out is that there are a few things in the financial statements that we don't opine on. So if you look at the table of contents, which is, I think, the second kind of page back, we opine on the basic financial statements and the required supplementary information. We don't do an in relationship to for the schedule of funding progress or the schedule of proportionate share of net pension liability or the schedule of contributions. So those are on page 58, 59, and 60. And the reason that we don't opine on those is because they will eventually be 10-year schedules. And so at some point the city may have different auditors. And so at this point I can tell you that we've audited those numbers for the last 4 years. But
what page are we on?
I'm looking at the table of contents. It's the second page in for the city.
Oh.
And we can go as slow or as fast as
no,
we need to, so please feel free to, yes.
I turned too many pages.
Nope, and feel free to go ahead and stop me at any point.
Hello, Neil.
Good evening, ladies.
Hi there.
Hello, sir. So those three schedules we don't do it in relationship to, just because eventually there'll be 10 years worth of data and possibly you'll have different auditors at some point, and so those aren't being opined on in relationship to opinion. But everything else in the basic financial statements and the required supplementary information and the other supplementary information has been audited. We do not audit the city officials, which is the introductory section. And then for the management discussion and analysis, we apply limited procedures to those. So everything else pretty much is audited with the exception of city officials and then the management discussion and analysis. So just so you kind of understand, our auditor's report's very confusing, the way that it's worded. It's just, that's what our standards require us to do. So One thing to note is that the City of Gladstone's financial statements for June 30, 2017 are very comparable to the June 30, 2016 financial statements because there really wasn't any new accounting pronouncements that came out that really affect the city. So if you compare the 2 years of financial statements, they're comparable. So one thing I'd also like to note in the back of the financial statements,
Page.
I'm looking for what page it is. It's on page 74. So it's the very last page. And it wouldn't have been in the draft copy. So this is the Independent Auditor's Report on Compliance on Internal Control over Financial Reporting and Audit of Financial Statements Performed in Accordance with Oregon State Regulations. So the Oregon State Legislature has said there's some specific things that they want Oregon municipal auditors to look at anytime that they're auditing a municipality. So for example, they have us look at to make sure that the city's bank is within FDIC insured limits, or the credit unions have something that's very similar to FDIC, so that's up to $250,000 is covered. It's collateralized by the federal bank. It's kind of like federal bank insurance, kind of.
NCUA.
And NCUA for the credit unions. So we ensure that if the city is above that $250,000, that that the funds are in a bank that is collateralized by the state. The state has a separate collateralization kind of pool that you can put the funds in, just to make sure that the money is safeguarded. Another thing we look at is ORS 279, which is public purchasing laws. So what that is that anytime that the city goes out for like a new project or something like that, they have to go out for a bid for that project. And so we make sure that they've put the proper advertisements in the paper, that it makes it so that anybody that wants to bid on the project has an opportunity to bid, and that there's a specific date and time that that bid's going to be opened, and that everybody has an equal opportunity to basically be solicited for that. So we test that. Then we also ensure that if the city has went out for a large project, that they select either the most qualified bidder or the lowest bidder, depending on how the qualifications fall out. Sometimes the lowest bidder can be disqualified because maybe they're only, the scope is to rebuild an entire road, but they're saying, okay, well, we'll just do the resurfacing part. Somebody else has to build the base of the road. So occasionally contractors can be excluded because they're not being able to address or fully fulfill the entire contract. So we look to ensure that the city selects the best bidder based off of some sort of criteria that they have come up with, and that they're selecting either the lowest bidder or whoever is the most qualified for that project. We also look to make sure that whoever is selected for that project, that they have insurance and that they name the city as one of those insured. So if there was a problem with the project, let's say that it was a bridge that collapsed or something like that, that the city wouldn't be on the hook, that there's at least insurance there to cover the project. So we test for like that kind of compliance. So these are the specific things that the state has said. So it's deposits of public funds, indebtedness limitations, so that's like how much debt the city has, budgetary requirements, which we'll talk about in just a second, insurance and fidelity bonds, the programs funded from outside sources, highway revenues, gas tax funds. There's very specific things you have to spend gas tax funds on, so we test that to make sure that it's being spent appropriately. Investments, what type of investments are held. The state of Oregon has specific, you can't be in really high risk investments, so we make sure that the city's in compliance with the state investment requirements, public purchasing, which I just spoke about, and then if any of the public officials were collecting money. So we usually see this at county level because they have like the treasurer is an elected position that collects money at county levels. Usually we don't see that at a city level, and we don't see that here with the city of Gladstone. So there were a few compliance requirements that the city was out of compliance with, and so Most of them have to do with Oregon budget law. So we'll go through those 3 things, and one of them is one that we have to make a slight change to. So the prior year actual resources and requirements on the city's budget document did not match the amounts reported in the prior year's audited financial statements. And so those numbers didn't actually match each other. And then the approved budget resolution for the general fund does not match the budget document and is also not appropriated by department as required. And then we come over to page 75. Expenditures in the following funds exceeded appropriations for the fiscal year ending June 30, 2017. And so as you can see, there's a long list here. The one that is going to be coming off is the second one from the bottom, the sewer fund for personnel services, the $66,913. So that's the one that's going to be changing.
Can we write in our books?
Yep,
Okay.
that's fine. We're going to replace that page. So I'm going to take those.
But why did it end up there in the first place?
So because of the reason that it's showing up on the financial statements. So this is purely a accounting reason. So there was this accounting pronouncement called GASB 68. So this was a pension. So everybody hears about Oregon PERS and how much this huge liability from Oregon PERS is. So about 3 years ago, the Government Accounting Standards Board said that all pension liabilities had to go on the face of the financial statements. And so what happens is now we have this huge pension liability on the face of the financial statements. Well, to make that number show up on the financial statements, you have to have another side for that. And so one of the sides that's getting hit is personnel services. And so it's purely an accounting transaction, so it doesn't necessarily push you over for budget. And so that number will still show a negative number on the face of the financial statement. It's on page, hold on, it's easier for me to show you by looking at it. It is on page 73. So it's under expenditures, so it's personnel services. So the budgeted amount is $300,000, and then it's showing actual of $367,000, which then is showing a negative budget variance here of $66,000. That is purely an accounting transaction. It is not something that we would anticipate that the city would budget for. So what we're going to do is on this page, there's going to be a little asterisk right here next to that number that then is going to have an explanation down here saying that it's not subject to budget law violations. So that one's going to go away. Did you have a comment, sir?
I was just gonna, when you get done with that last page, because the first sentence you said in your opening remarks was, we have an unmodified clean audit, which is the highest level we could get. How can you get that, and we have these issues to deal with? Just being able to explain that, I think, a little bit would be helpful.
Okay. So, let me finish going through the budget violations,
That's
and then we'll do that. Okay. So these are all of the over appropriations for the budget. So what that means is that for like the general fund, the general government, it's over expenditures by $176,000.
Might be a good time to
We made a
disperse
sheet
it.
for you to explain.
Yeah,
some.
I did. I've got this information here, and it will explain some of these overages to you, so that you can
You need one, Jackie?
No,
follow
thank
them.
you, I have one.
Me and my dressing.
And these are the overages that we highlighted in the first email I sent you that said areas of concern on page 61. These are the same areas of concern.
Just to familiarize you with this worksheet a little bit, it's just, it will be right in line with what Tanya is talking about. I already have eliminated the sewer one off of there, so
this-
it's not showing.
This means in layman terms, we just spent too much money.
Yep.
That
Yes,
Yeah.
You did it right.
So the way that the process works is that the city has a budget committee that comes together, and before June 30, or before July 1st, essentially, they go through and they come up with what they believe the budget is going to be for the next year. And so
2 years.
yeah, so for example, we're looking at the year end June 30, 2017, and so this budget was done before June 30 of 2016. So it's basically done about 6 months prior to the beginning of the fiscal year.
And this was a single year budget. It was not on the biennium.
Right.
Got it.
Yeah. And so what happens is the city comes together, and the committee comes together based off of usually a starting point is prior year expenditures, and then they come together and they go off of what department heads say, what the past finance manager kind of helps come up with those numbers, to then determine how much they anticipate that the city is going to spend in the next year. And so then they go through this process where you have budget committee meetings, and you go through this process that the state has set up. And then the budget is approved before June 30 of that prior year. So in this case, it was before June 30 of 2016. Because the start of this year that we're looking at was July 1st of 2016 through June 30 of 2017.
Okay.
So then the way that the budget process works is if there's changes, then you can do a supplemental budget or you can do a budget transfer. If you do a supplemental budget, if it exceeds over 15% of what the original budget was, then you have to go back through that whole process again, where you have to advertise in the paper, you have to have a budget committee hearing, and then you have to take it back to council and do a amendment to the budget. So in this particular year, June 30, 2017, there was only one budget change in the year. And so that's part of the reason that these numbers are so high. And so I don't know if you want to explain a little bit more. As you can see from this sheet, it kind of explains what the primary reason was and the primary driver was for going over in these particular areas.
Simply put, when the supplemental budget was taken to the city council for approval right before the end of the fiscal year, there were not enough funds included. The adjustments did not.
I have the resolution if anybody needs to.
Yes, we have it also. And so, it was an oversight on the part of the finance manager at the time as far as not totaling out what was necessary to increase the appropriations by.
So the two areas of concern in my mind back in then was, one, there was an ask to go to the council to transfer $541,000, which is a lot. And what Kathy's saying is that that wasn't even enough. We should have transferred more, but we shouldn't have overspent our line items to begin with. And so those are some things that now Kathy wants to provide some more detail as to what those overages were.
Why would you not know what your fire and liability insurance is going to be?
That one was an accounting error made on that line. Let's just say CIS, the insurance, city and county insurance, sends their billings early so that you can anticipate it into your following year budget. It got paid in the prior fiscal year rather than just being held and paid in the following fiscal year. So they ended up paying 2 years last year. So this year, in the 17-18 year, it will be very, very low and well under budget. But there were 2 years in the prior year and no, annual premium in this year. So that was what we found through investigation there when I was looking to see what the overages were. So there, as I say, FY 17-18 and 16-17 were both expensed in that 1 year.
How often do you guys typically do an updated budget, or should the
minimum of quarterly, as far as a really strong review of it. And then Jackie and I were speaking about that today, that many times governmental entities will come back on a quarterly or a semi-annual basis and say this is where we're standing, and possibly do the budget transfers, which are just moving money around from one line to another line, or one department to another department, etc., where a supplemental budget is where you're actually bringing in new resource. For some reason, say there was a grant, or your state revenue sharings come in much higher than you anticipated, and then you're adding resource and you're adding appropriation. Yeah. So what our intention is to analyze this year very carefully, and then by June 30th of this year, which will be the first year of the biennium, come back to the council and say this is what we're looking like. We suggest making these adjustments if necessary, and then going forward. It's a little bit different with a biennium budget than it is with a single year budget.
It's very rare to have overages, especially in transfers.
Yes.
Because you anticipate those.
Yes.
So, yeah, it was just an oversight.
So are you going to start at the top of this list and kind of explain to us what all of these items are? Or?
If you like.
That would be helpful.
Okay. So we had on the computer and technology service in the administration section that was about $176,000 over. The two biggest culprits that I found there were Tyler Code, the implementation of the new software system, and then also additional costs from the IT staffing because of all of the implementation of the new software system. So that was the $81,000. Fire and liability insurance, I explained that one. In the police department, it was overage and personnel costs. Those the additional overtime, additional the associated payroll costs this year, those came in higher than what had been budgeted in the year. There were adjustments that were made to bring in more money to the police department, but not enough to cover.
Because they hired an additional person this last year as well on the police department. So I guess my question would be, if you start a budget here based on what it was last year, and you're already going to be short, and now you've added another person, that's another $100,000. So in 1 year, are we going to see this number at $155,000?
She did bring in, for the police department, she added in an additional $85,500 for the police officer, but I believe by the time all expenses were totaled for the end of the fiscal year, it basically is where it popped it over. Now, so this is not directly attributable only to that police officer.
Okay.
This is attributable to everything within the department, up and down.
So, and that's just out of the general fund.
Yes, not the police and fire levy, or not the police levy. In the police and communication fund, there, let's back up just a little bit, though, as far as the transfers out there within the general fund. The one thing, as Tanya was saying, and is very tricky with Oregon budget law, is how you adopt that initial resolution. When you're adopting the budget, that dictates how you handle everything all year long. And if it's adopted very restrictively, that can be very difficult then to work around throughout the year. One of the things that have been done is the transfers were itemized out so restrictively in the resolution that when she went to do one that was outside of that one mentioned in the resolution, it put the city in a budget violation. It could have been fixed through a supplemental budget, but it wasn't. I don't know if it was just lack of familiarity with budget law or what it was. But this is one of the reasons why we have this transfer out to roads and streets. And as far as Tanya was saying, it's very unusual to have a violation in something like that. But it's just a perfect storm, more or less, as far as how it was lined up.
Is it your job with the city to notice that these things are happening And to go to the budget committee or to go to the city council? I mean, how do we?
Yes,
like, every
it is.
quarter, that's
It is my
that's
job.
the job that
That is
that
the
you
job
have.
of the
So when you
person
do
in charge
financial
of
statements
finance.
every
Yeah.
month, you should notice that we're
Yeah.
going
Yeah.
above or going.
And I'm trying to be very respectful, but I do want this group to understand that that person is no longer working for the city.
Oh, I'm not making that.
No, but I think that
No,
that
'cause-
that's part of our corrective action plan. And Kathy has been brought in to help assess this, but that position is supposed to be...
That's what I'm talking about, her position.
Yes.
I'm not criticizing at all, 'cause
Right.
I do accounting and I make mistakes, and so it's not.
We all do.
But I just need to understand. It's been 30 years since I've done any government accounting.
Yeah.
Or
Yes,
at all.
and
So I just need to know the process of what is supposed
Exactly,
to happen.
yes. And then, of course, states differ drastically, entities differ drastically, but there are a set of guidelines that we have to follow. And Oregon budget law is very
Specific.
specific.
And
So
restricted.
technically,
Yeah.
if we're doing it
Yeah.
right, we should notice every month
Yeah.
that something's going, that something.
I would say quarterly
Quarterly.
to biannually.
But let's say
Yes.
quarterly, you should know something's
Yes.
going wrong, and by quarterly, we
Then
should,
you course
should
correct.
be fixing it or
Yeah.
coming to the city council to do something
Absolutely.
about a supplemental budget.
And, oh, I'm sorry, I was just gonna say, occasional budget overages happen. They happen. Almost every entity is going to occasionally have one of these pop up.
This is $500,000.
This is the worst. Oh, I'm sorry. I don't mean to be disrespectful either. But this
No,
is.
you're
this
not
is-
at all. This is just
This
a
is,
large
we're not gonna see this again.
number.
Yeah.
Well, no, that's why that's why I asked about the fire and liability. It doesn't seem to me that fire and liability should ever be over, because you should know.
Right.
But the computer system, if I remember all the problems we had, that's
Yes.
understandable.
There's a lot going on.
So you could see fire and
Mm-hmm.
fire or police, like a good example is if at the end of the year, like let's say we're in the middle of like June 15th, and then something significant happens within the city, and then there's this huge investigation, so all the police officers are working a whole bunch of overtime. That would be a perfect example of a reason that possibly those numbers would go over. Because you can't anticipate it, especially when it's like right there at the end of the year, and your city council meets June 15th, and so that could be a situation. It is, like Kathy said, it is common to have Oregon budget law violations, and typically it's a timing difference. So, for example, you purchase a new police car. So you're anticipating that you're going to get the police car on July 15th, which means that at that point then you recognize the expense for it because you're supposed to get it in next fiscal year. Well, the police car shows up on June 29th. Well, now you have to recognize that expense in last fiscal year. And so those are typical instances of when we see a lot of budget violations, when there's something that, is a timing difference, and it's all based off of Oregon budget law and accounting kind of principles. That's usually when we see those budget violations.
And those are explainable and understandable, and the state understands. And there's not budget police, thank God, that come after us for it, so it's being able to quantify it, qualify it.
Okay, so I have a question, if we can go back up to the top. What's Tyler Encode? Who is Tyler Encode, and why did we spend an extra $81,000 with them? Or is that something that's just going to get rolled over into the next year?
Part of the new Tyler technology software upgrade that the city did this citywide conversion with that.
And that is
It's the new
complete
accounting
now.
software.
Okay,
That's why you have a new looking water bill and sewer bill.
Okay, so my question, I guess, is this $81,539 part of the budgeted expense and we paid it early, or we need to explain to the citizens why this person said they were going to come in and do a job for X amount of dollars and it's $81,539 over budget? People will ask us
I
that.
cannot answer that question. I was not here nor was, involved in the Tyler project, so I don't know why it is 81,000 over. The line item, what I can tell you is that the line item where it was budgeted is $81,000 over. As far as further investigation into it, if,
So I guess that's a question for the city council. How much did they budget, and is this going $81,000 over? Because I guess what I don't understand is if it's going to be that much money over. I come to city council meetings. Nobody said anything.
Well, I can't get in the weeds, so don't look at me.
Well, I
Wasn't
would
that the
suggest,
beginning of the problem that was at the very beginning of all of our computer problems that showed up at city council and everything? And
Well,
then-
that's not Tyler. That's another place, isn't it?
yeah, I mean, if you want specific questions answered, we're happy to take those and follow up with them. First of all, I want you to know I'm not happy. And I want you guys to ask questions. It's very poor financial management. And Kathy and I are also trying to give answers to things that we weren't necessarily here or part of.
Right. No, I totally understand
So
that.
if we could get specifics, that's great. The audit committee, like unfortunately Neil says, you're not supposed to be in the weeds.
Well, I
But if
disagree.
you do have specifics, and if we say we don't have the answers, it's not that we don't want to answer them, it's just going to take time for us to research them.
Well, my only question is this $81,000 a shortage in this company's proposal to Gladstone, or it's going to all come out in the wash? Because that kind of money would be concerning to me.
I can't answer that question.
Okay, well, I think
Yeah.
that's something we need to find out.
Okay.
So, and following up on that, so we've got the resolution here for,
The one that was
540
done,
Yeah,
right.
back in June.
Yep.
541,000, let's see, yeah, $541,500.
Mm-hmm.
So, and this is on top of that?
Yes.
So where'd this money come from? I mean, we paid these, right?
Right. Oh, this is all historical information.
Right.
Right. This is all paid, and like with the Tyler with the Encode, that contract is complete now. They're just finishing up some training.
So really,
Um,
our shortage was $1 million.
Yes. The 541.5, this was a budget transfer. This wasn't a supplemental. This was just, you had, say, $10 million on your bottom line budget, and you moved,
Yeah.
moved money from one
Well,
area to the
if you
other.
need to look, and,
Yeah.
it was, I don't know if you've seen this.
That didn't add money to the budget,
No,
sir.
no.
But the
That
issue
just
is
moved
that
it.
we're not, basically we weren't moving those transfers appropriately.
Right.
That's essentially what it was.
There-
that
Or
not
enough.
enough.
You've got a line that
Yeah.
says
Yeah.
10
See-
million in transfers and then you
Mhm.
moved 500 and we should have moved $1 million.
Right.
Is that, okay.
Mhm.
So I wouldn't say that it's a shortage. And the reason that I say that is because there were other line items that were below budget.
Yes.
So a lot of times what would happen is in a typical situation, this resolution would have been higher and it would have moved those funds from another appropriated amount to a different line item.
But this is
So-
already, I'm sorry, go ahead. I thought you were done.
I was just going to show you. So if you look at page 67 in the financial statement,
While you're looking, this was historic. I mean, like 3 years ago, we transferred like 226,000 or something like that. But I went back, I've lived in town 28 years come the 1st of November, and I've been hanging out here for those 28 years. And I went back through the last 10 plus years of budget done. And the transfers have been somewhere around 150, I'll say about 130 to 170,000 dollars. A couple times they were around 200,000, depending on what was going on. I mean, this is historic. We screwed up big time.
This one?
Yeah,
Yes.
I mean the $500,000, and
That's
now
what
you're saying we're another $500,000 on top of it.
I don't think any of us are not going to disagree.
Right.
with
Well, I just
you
want to
on
make
that.
sure that
And I think
everybody
that-
knows, because
That when this came to the council to be approved, I think the council had a hard time understanding what they were approving.
Well,
That's correct, yes.
well, I think, no, I think what the main reason it got approved was, in the staff report said, if you don't approve this, we're in violation of state law. I mean, that's the only reason I approved it. It was either, the gun was to our head. You have to.
So what's interesting on that too is that there's 200
You can-
grand of
You can have
that
that.
was allocated to contractual and professional services. I assume that's related to that, potentially related to that accounting system stuff too?
Yes.
So then we're talking about an additional 280,000 over what we initially
Yeah.
budgeted?
Right there, contractual, it's 121, that's
it's
and
121.
that's
Where are we going? I got sidetracked.
Yeah.
No, I think,
Maybe it is
I
worth
think
looking
the
at that.
contractual and professional
Well, we
services
can, but as
is
we
the
can
legal
certainly do that,
expenses
and we'll just even understand what the
I
Well-
think
what
Jackie's,
was
I think
contained
Jackie's right.
in the contract.
Well, legal is 90,000.
Mhm. Legal fees is 90, yeah. Here.
That was separated out.
Yeah.
Or maybe I guess
Yeah.
I'm wondering if maybe that's just a conversation for the budget committee too, when they're looking through these things as well.
Mhm.
Maybe not at-
But-
for our
But again,
committee.
this is,
No.
it is, if you were planning ahead, yes, it would be a conversation for the budget committee. As far as historical, needless to say, if the contract's completed now, there's not gonna be a whole lot we can do about it, but we certainly can pull the information and let you know what the original contract was, what any changes were made to it to increase the cost, et cetera.
So I understand that
Yes.
what happened was we overspent our budget.
Yes.
And so when they were budgeting, they either didn't think ahead or they didn't understand that if they only budgeted $200,000, excuse me, and it was really going to be $300,000, they were afraid to put the budget to the amount that they might have, I mean, they weren't paying attention.
So,
Well,
yeah,
Or
it's not
find
on.
the money somewhere.
It,
Right, they
it
just
was,
say, oh, we'll do it, and then we'll...
it was that because of the restriction with Oregon budget law and the way the budget had been set up, it was very restricted that it needed to be spent in certain line items, certain categories. And so, obviously, because they didn't go over in the bottom line, it was an overage between, it was a shortage in one category and an overage in another. So basically, all that needed to be done was a closer look and a closer adjustment made to these various
So we
categories
didn't go in
and
the
line
hole.
item. Didn't go in the hole.
Didn't go in the hole,
Didn't
$1
spend
million.
more than what was anticipated to spend in total. Okay,
We
so
just
very
didn't-
important point.
Yeah.
Yes. It's not that you had adopted a $20 million budget and you spent $21 million. You adopted a $20 million budget. You probably in total spent a little less than that. But the appropriate, where it was spent from within that $20 million was
just
not
not in the right
accounted for
place.
correctly. That makes sense?
It does, but I'm not sure if I'm quite on board with you on that. But
Well, we can
So-
show that
so-
in the
so
statement.
one of the- so one of the things I was gonna show you.
Okay.
I
I'm
was
on
go-
67.
Okay, so if you look at page 67, so the way that the general fund is budgeted for is the expenditures are budgeted by department. So for example, each of these is a department. So general administrative services, municipal court, police, fire, parks, recreation, senior center, and library. So if you look, the ones that got dinged were the general administration because it was over by the 176,000. Then the police, which was over by the 54,000. But then if you look, like fire was under by 661. Parks was under by 289. Recreation was under by 3,000. So yes, there's $1 million here in these when you total it up, but you're under on all these other categories.
We can't even get picnic tables for our park, so when
Oh.
somebody else, when another fund spends that money, it's concerning to us.
Well, as you can see, your total expenditures for the general fund came in under budget by $1.4 million.
So they could have given you picnic tables.
Now they know.
Sorry.
And you can also see here, if you look in the budget column, it says original and final. So the original budget was what was adopted, and then the final budget includes these
Budget
transfers of 541,000.
Oh, okay.
The transfers.
I was wondering what
yeah.
the difference was.
So that's what,
Say
that's
that again, I'm sorry, you have to back it up and say it again.
on the budget columns there. It says original at top and
Okay.
final.
Yes.
So the original is the adopted budget as
Okay.
of July 1. Then if there are any budget transfer resolutions like this one for 541.5,
Okay.
those adjustments are reflected in the final totals.
Okay,
Okay?
so that's part of addition.
Right.
Yes.
So
And so it would have increased here, and it would have decreased in another area of the financials.
Okay.
So, can I ask if, let's say the park person, whoever's in charge of the parks, they should technically be paying attention to their budget, and who do they go to? Let's say something happens and they want to spend more than what they've got. I mean, something comes up, I don't know what it is. Do they go to the city council? Do they go to, they go to Jackie?
Right.
the department head would go to
The finance
to Jackie.
manager.
Yeah.
And then depending on what the conversation and their decision, they could do it internally depending on the amount,
Right.
or they might need to come to city council.
And I think that one of the things that we're going to be cleaning up now with this new software conversion is that department heads weren't getting timely information either, so they're a couple months behind on monthly reports. And so there's so many factors that play into just poor financial management. But I think the key is, the city has money, but how we allocate it and spent it was wrong. Not in every fund or account. But
The other thing to note is that there was also a software conversion during the year. And so a lot of times when you have software conversions, that makes it difficult because if the numbers don't get brought over correctly or don't get brought over immediately, then you have department heads looking at numbers that are possibly inaccurate because you're missing the first 4, 5, 6 months of the year's worth of information.
Mhm.
Because you've got your total budget, which is the full amount. So for, let's just say, the library, down here you've got a budget of 1.4 million, but half of it's already been spent, but you can't see it in the system. That also can be a problem. So it's kind of, it was a perfect storm. Just, inexperience of the finance manager. It's typical that it takes a while to get budgeting down. And we see new finance people make mistakes doing this. It's often. So it was the perfect storm.
Okay, so I guess my biggest question is, now we're short money, and I understand that it all comes out in the end, but I'm on budget, and I understand how it works line by line by line, and how we had to beg for an extra $50,000 here or $25,000 there to move money around. So now we've spent $175,000 more than we needed to spend in general administration. Where you're taking that out of somebody's budget who lost? Because here's the thing. So like Jim Wynot came to budget and said, I've got this truck replacement program. And he basically is saving money over he's got leftover money here, and he's got money from this year and money from this year. And yeah, there's money on that line item, but that was money he was saving to spend on a new street sweeper or a new fire truck or a new whatever Jim has to buy that week. So who's losing? I guess that's my question.
As you can see within each department there, at the department subtotals, you can
Right.
see who is under and who is over.
Okay.
So if you want to put it in a win-loss situation, fire lost because they came in under budget $661,000. So that helped offset general administration. It helped offset the police. it helped offset, it more or less offset everything else. As you can see, total expenditure.
We're looking on 67, right?
Yes,
Under fire?
yes, yes.
You
They
came up with
came
what?
in under budget,
661.
661,000.
You have to
Oh, okay.
look on
I
their
see.
book. Oh, okay.
Yeah, I am.
So you can
Okay,
see the
thank you.
total expenditures for the general fund came in under budget. When you add and minus all of these different subtotals, they came in under budget, $1,439,000. Now those are available, go to carry forward. Basically, it's your ending fund balance. It rolls into the next year for rebudgeting. It's not lost. It will
Right.
just
And
be
do we-
reallocated in the following year budget.
I mean, our budget committee doesn't say, okay, you only spent $661,000, so you don't really need what you're asking for.
Yes, they have said that.
No, they haven't.
Yeah, they have.
Why?
They've said to different
Who's-
places,
who
you only
says it?
used X amount of dollars in the last 2 years. Why, can this be taken back? I heard them say that a couple of times at the budget meeting. Not lots of them, but there were a couple of different instances where people got cut back on on funds that they never used, so why carry that number forward?
Okay, because that I don't remember.
Because it doesn't
Yeah.
seem right to me that if a manager of a department can save us money because
Right.
next year they might need a new truck, or they might need new computers, or
Right.
they might need something, that it should be
Yeah.
taken away.
Well, I understand, and I agree. I mean, I already apologized personally to Colin Black, our senior center manager, and Lauren, last name, library.
Lauren at the library.
Yeah, because, their budgets got raided. And they shouldn't have.
No.
And then now the fire department's got, and the parks. I
guess that's what, so now we're working off of this budget, am I correct? The 15, 16?
No.
No, the 16,
No,
17,
we're
that's
in-
the next one down.
Okay.
Or,
We're working
no,
off
we're
of
at
17,
we're in the
18.
17,
Well, right.
18 fiscal year now.
17.
oh, no, you're talking about right this year?
Yeah.
Right now?
17,
The
18.
biennial.
Is that what you're asking? Or are you
For the
talking about?
biennial.
So we're working on this money.
'Cause
No.
this one was
No,
16.
one
No,
more.
17,
This is the one
19.
we're closing right now.
Right, okay, that's what I mean.
Yeah,
So
for this
is the one-
statement.
So,
Yes, that one matches this. It should match the
Yeah.
original column.
okay, so there are items on here that these departments heads, even Jackie, have saved for. And so those funds are going to be lessened based on the fact.
No,
No,
Why
we've
would they
already
be
adopted a
lessened?
new biennial budget
Yeah.
with a carryover balance, so we're closing out this year.
and any monies left
Yes.
are rolled into the following year.
Right.
But there's not money left.
Well, so there's $1 million less to roll over,
Okay.
right?
Yeah.
So what budget are we working on now?
We're
We're
on
under
the
the-
first year of the biennium. It's the first time the city of Gladstone has done a biennium budget.
So it's going to be 18 to 20?
No, not.
It'll be 17
17
to
to
19.
19.
17 to 19.
July 1, 17 through June 30th, 18, and then 18 to 19.
And since it came up, a question. Are audits on an annual basis, or is it going to be going to biannual?
Annual.
Okay, so how do you audit a 2-year budget in 1 year?
That'd be
So
fun.
it looks, it's actually not that difficult. We have lots of clients that do biennial budgets.
Okay.
So essentially what you'll have next year is, so looking at page 67,
Mm-hmm.
you'll have original and final, and then you'll have actual, and then it will have above it, it'll have 17-18. So next year, it will just have
Okay.
one column, and then it'll have actual, 18-19, and then those will be zeros, and then there'll be a total variance column. So you'll be able to see
So
that,
it's like the budget, it's already set up that way, where
Yes.
basically half of it's this year, half of it's next, with some
With-
parameters
yes.
for inflation.
Right.
and capital projects as
Right.
well.
Okay.
So if we
typically.
see any big anomalies this first year, then we will do a course correction and or supplemental figure what needs to be done. Towards the end of the second year, we will have to be very, very careful and on top of it to make sure that, we are not exceeding that biennial limit.
But we have a new system that will keep that won't be the managers won't be behind. If they're doing their job and paying attention for their management, they're,
Right.
the things that they're getting won't be behind.
Yes, and in all honesty, I don't think it's really a department head issue. I think it was how the budget was prepared and processed. So with this new technology, department heads will have real-time access, so they can actually pull up their account on their computer. They can't change anything, but they get real-time data as the finance department is paying bills, so they will see real-time data. And part of that's why we are doing the fiber connectivity project to loop all of our city buildings together, because we don't have access. So the senior center and public works only get paper copies a month or so behind of what we've had. So a lot of that is going to be different on how we process purchase requests, how Kathy and I will be meeting on a quarterly basis to look at our budget line items to see. And I do know we're still going to be restricted in this current budget because that's the way it was adopted. Correct? Yes. Very restricted, yes.
We may have to change one of them.
Change one of what?
I don't know. I don't know if you can leave the general fund the way that it is. I think we need to talk to Department of Revenue.
I think that would be wonderful if we could.
I think we have to at least change one of them.
Mm-hmm.
But we'll have to go to Oregon Department of Revenue and find out how we can correct it.
What the problem was is that normally in your general fund you adopt the budget by department. So you would adopt it by administration, by police, by
right here.
whatever. So then that way you look at the department as a bottom line budget. You stay within your appropriation, your line items within that department, but the department manager has the ability to say, okay, I want to buy picnic benches, and I want to buy them out of this line item versus this line item, so it's going to be a little over here and a little under there. And as long as their bottom line for Parks and Recreation stays within their appropriation level, everything's good. How the budget was set up this year, though, for the biennium is it was put into categories: personnel services, materials and services, capital outlay. That means that we have to constantly monitor across all departments within the general fund, along with all the other departments too, because those were done that way too, that personnel services always stays within that bottom line of personnel services. We can't allow any type of leeway within a department.
But we are here.
But I was going to say, I mean, personally, I think that's the way it should be.
This was adopted correctly within the other.
Okay.
I'm sorry?
I said, personally, I
Why?
think that's
Why?
Trust.
Well,
Well,
but if there's enough people looking
If I
at...
can give you an example.
Well, I mean, we spent $10,000 on a website to a company that didn't have a clue as to what they were doing with
Yeah,
the
but
website.
that shouldn't have been that didn't count where it was in the line item. That had to do with either the hiring process or
Right.
But
a lot of things.
I hear what you're saying. It's kind of like the buck stops here.
Right.
You know, where does the accountability...
I mean, we spent
And I'm
money.
not saying, Jackie, I'm honestly not. I'm just saying that when somebody calls you on the phone that lives in Gladstone and says, why is this thing over this much money? As somebody on this committee and or the budget committee, you got to have answers.
But I think what you're saying though is that it's at a personnel services level, not at the department level. So I think someone's going to call and say, why are you over on general administration, not why are you over on personnel services in general administration. I think that's the issue. I think that giving the department a little bit of leeway in where those are. So you lost somebody or you gained somebody, and now your personnel services goes up or it's out of flux with your budget, but that's okay because you can kind of shift around, right?
Well,
Right.
and one of
I'm all for it. I get that.
I guess one of the problems is that right now, general administration, so like Jackie's salary, Kathy, plus police, plus all the parks, plus the senior center, all those people are all in personnel services. So now you have to add up all those totals, and that's what the budget appropriation is. So unfortunately, that makes it very difficult for the library director or the senior center director to be able to monitor this budget, because it was not done by department like it was supposed to be
Oh, I see what
Well,
for
but-
next year,
Whoa, whoa,
for
whoa,
next
whoa,
year's
whoa, whoa.
biennium.
I think you're wrong. Because general administration personnel is just basically city hall personnel. Because under police, you got personnel services.
So for fiscal year ending June 30, 17, it was done correctly. For the budget for the biennium, it was adopted.
Differently.
Done wrong.
Oh, this was the...
Yes,
Yeah,
that's
that's the new one.
So
Okay,
that's
so-
what one of our findings is that was done incorrectly, because it was done at a total level for personnel services, at a total level for materials and services. And so, unfortunately, that makes it very hard, because then, like, for example, Jackie can't monitor a budget because she has to add all those numbers together to be able to monitor
You need
it.
to be looking
Okay.
at a total
Okay.
So that
citywide
doesn't-
not for the
Okay.
fiscal
Now
year
I
that they're
understand what
in.
you're talking about.
That doesn't
Okay.
allow the manager.
No,
No.
I
To
understand, and I
budget their own.
agree.
Yeah.
I thought you were talking
Yeah.
about
Like it is.
within each department.
No, so
Okay.
with, yeah.
Right. No, I understand now. Thank you for-
supplemental budget.
Thanks,
we
Jackie.
don't
Yeah,
know, we don't
that's it.
know,
Pictures
we
worth a
don't know
thousand
if,
words.
this is a unique situation, I've never seen this happen before. So we're gonna have to contact Oregon Department of Revenue and see if there's a way to fix that. So my hope is that we can do that,
By
that he
coming
can do
back
it.
to the city
Yes.
council and saying, we're taking this and we're changing it to this. Dollars are all the same, and showing you exactly how we're setting up the dollars.
So
But
breaking
put
it-
it in a workable situation.
Breaking it out like you would
Yeah.
the year
Yes.
before.
Yeah.
Yes.
Like this
Okay.
is here.
Yeah.
I'm good with that.
Yeah, so that's what we'll find out if we can do.
Okay.
If we can't, if the Department of Revenue says you live within what has been adopted, then what we will have to do is, as I say, monitor it very closely, and then if we do have to, through budget resolution transfers, we can move things around if we have to. But it's going to be bringing a lot more back to the council with a lot more explanation, and that always is a concern.
Why did it get adopted this way? I mean, what?
I'm sorry, I can't answer that. I wasn't.
Didn't have the software to be able to break it up, did they? I mean, it seemed
Oh,
like
yes.
such a
Yeah.
mess.
Yeah,
They
they did. It was, I think it was truly just a misunderstanding of the budget process. Yeah.
You know, you rely on your professional staff when you're advising elected officials and department heads, and so it is very frustrating. And I want you guys to vent and ask your questions, because the intent is to clean it up and make it better. And I know Kathy and I tomorrow are meeting to go through the computer technology line item, and we can flesh out what happened with the Tyler Encode in that fiscal year.
Yeah.
Because we're still trying to close out the fiber project. And are there any other specifics in this list that Kathy made that you would like us to go through? Because we talked about that we paid 2 insurances in 1 year, and that's why that one was high. But we're happy to get detail on any of these other ones if you would like that.
So there's the bottom 2 there, Jackie. There was a lot of right-of-way things that happened this last year. How can we be short if we're charging all of these right-of-way fees in this last couple of years on this paper right here that you guys gave us?
Right. So
Yeah.
Kathy, this one that you did you want to finish going through? We're at police
Okay,
and
sorry, yeah.
Sure. No, it's a good question, Mindy.
Okay.
Okay, as far as the other items that we had here on the state revenue sharing, this was an interesting one because additional revenues came in higher than were budgeted within state revenue sharing, and through a supplemental budget adjustment, when you bring in money through revenue, you can't spend it unless you have the appropriation to offset. So they brought in extra money. She transferred it from state revenue sharing over to the general fund, but because the supplemental wasn't done to increase that appropriation to equal that revenue, it was a budget violation, and it wasn't truly eligible to be moved and spent. It should have just been rolled into the following fiscal year. So that was another issue there on that one. The civic capital budget, again, that was, it was not appropriated in the proper line item, and it was spent out of that, out of the incorrect line item. They spent materials and services money, and there was no budget there. It was all sitting in capital outlay. The transfers out and dealing with these rights-of-way that were the payments that were made there, regardless of how much revenue was brought in, if there wasn't the appropriation to spend this money out, you can't spend it.
Okay.
We
And
had
so
the
it-
money,
yeah.
we just didn't
Had
allow.
the
yes.
appropriation.
Okay.
Didn't have the
It's always-
authority.
You've got, exactly, you always have appropriation and expenditures. You need your appropriation first to make those expenditures. On the revenue side, you need your resource, and then you get your revenues. But on those appropriations, it's critical that you do not overexpend those appropriations.
Okay.
There's always ways to make things work legally.
Mhm.
It's just, keeping an eye on it and doing it appropriately.
Okay.
So what about the roads and street one, just real quick?
Oh,
Like third from or the fourth one?
roads and streets.
The
Where-
straight
So
revenue
the water,
sharing.
water and sewer?
I'm sorry, I'm not seeing.
Transfer general fund to 82,000, yeah.
Oh, the 82,000 there,
That's-
transfer to roads and
They've got a
streets.
pretty good sized
This
budget.
this was a transfer that was made out. As far as what it was to cover over in roads and streets, why that was moved over there, I would have to dig deeper on that one to find out. It was, the reason it was a budget violation was because, as I say, it was not budgeted or specified in the adopting resolution. So there was no appropriation to make this transfer out to roads and streets. Why it was done, we'd have to see if we could go back to when it was done and research that.
I didn't read it.
I know, I'm not yeah. So we
Yeah, I
can,
mean,
we
Jim's
can
got a huge
investigate
budget.
that if,
So, okay.
if,
No, I'm not pushing,
again, these are historical
if somebody
now.
else wants to know
Yeah.
where the money got spent, or,
Wouldn't that be caught somehow, like in a quarterly when you're doing quarterly
Yeah.
meetings and things?
Yeah.
Is that not happening?
I don't believe so.
Okay.
And again, with the conversion, with the move to the biennium budget, with just being a new person coming in and unfamiliar with governmental municipal accounting, I think there was just, as they say, an awful lot going on that some of these things got slipped through the cracks.
Why did we move to a biennial budget?
Eric Swanson wanted to.
Yeah. I don't think we should have. It was, Oregon City did it, so,
So we needed to.
right.
What's the benefit?
So,
Well, I was gonna say, the benefit is,
Yeah.
right now, we're not trying to budget for next year, starting in June.
Right.
So we, department heads would be getting together, going through,
Mhm.
Kathy would be
Yep.
crunching a lot of numbers. Here
I'd be
maybe.
buried in budget at the same time we're trying to wrap this up.
Right. And so I mean, there is advantages.
Yeah.
Don't get me wrong.
Mhm.
I'm just not convinced yet that Gladstone's ready for it with all the other stuff that's been going on. But I was the minority, and here we are.
So the biggest advantage.
I'll be,
So the
I'll
biggest
be upfront.
advantage is that then the city has that 6-month period essentially that you normally would be spending a lot of time working on budgets, and that's department heads, that's finance, that's city management. That's a lot of time spent focusing on the budget, going to budget committee meetings, getting things prepared, things like that. It gives you an off year so then you can focus on other stuff. And then you're only having to do it every other year. That is the biggest advantage of having a biennial budget. And you have an opportunity to go back and you can make adjustments to your biennial budget by doing either a supplemental budget or a budget transfer. So there are ways to correct that if they're off a little bit, It's sometimes hard to predict when you're doing a 2-year period versus a 1-year period. But there are advantages to doing that. There's a disadvantage in the fact that you're not looking at it on an annual basis. So there's pluses and minuses each way. The state of Oregon is on a biennial budget. They do it that way. There's a lot of cities in the state that are going to biennial budgets just because it frees up administrative time to be able to focus on those projects that they don't necessarily have time to do the rest of the year.
Say like for many cities that are looking at doing a computer conversion, they'll do their biennial budget one year, the following year they'll do the conversion, and they're back in the budgeting the following year. So it really gives you the ability to focus, as Tanya said.
So even though, like I say,
Yeah.
I'm not a big fan of it, it is giving us, the city, and particularly staff, time to take on the civic building, and and the library.
Exactly, that's
So-
a great
so,
example.
I'll like to say, I'm not a big fan, but there is, there's some good come out of it too.
I think the city took on too much too soon.
Oh, I'll
The
second
last
that.
2 years, they really did.
So, are we at a place where we can just kind of ask questions? Or are you done with your
We still
continue?
have a little bit more to go through.
Okay, please, go ahead, I don't want to get it.
Yeah, sure.
So the difference between this original and final, I think, is only 400,000.
Mhm.
And it looks like that's just the contingency funds, is that on the resolution?
So, contingency funds are on page, it's on a different page, because those are just expenditures by, it's on page, sorry.
Okay.
Unfortunately, government, we have to make things really difficult.
Oh,
So we
yeah.
have 2 pages
Yes.
for the general fund.
Yes.
So the other page that the general fund is on page 53. So that's where the contingency is, because it's not a specific department. It's the very bottom right here. So see, it was originally 400,000 and then it moved to 0.
I guess my question though is that, where's the rest of it? Because the resolution was for 541.
It was movement from general fund to general fund, so it was just shifting dollars in between. The 400,000 was truly only the money that actually moved from down below up above. So that's why you're seeing that.
Any other questions specifically on this? I can answer more questions though too, but. So those are the over expenditures. So now if we go back to page 75, there's one other minor non-compliance, and that's the Civic Building Capital Fund had a deficit budgetary ending fund balance of $46. So state of Oregon, you're not allowed to have deficit fund balances for budgetary purposes, and this one was a negative $46. So this is also a not uncommon thing to have happen in funds, and it's such a small dollar amount. So a lot of times it's a timing difference. There's anticipation of certain revenue and it doesn't necessarily come in time. So that's just a minor thing. So now back to Jackie's question about, okay, how do you have a clean opinion when you have all this stuff going on? So these are non-compliance with Oregon budget law. These are not accounting or government accounting standards violations. These are Oregon-specific findings, and they're non-compliance. They're not necessarily financial statement numbers that are wrong. So when we give a clean opinion or an unmodified opinion, that means that we believe that all the numbers in the financial statements are correct. We have support for them. We have went in and looked at those numbers. So in our opinion, these financial statements are presented fairly, which means that we don't believe that there's material mistakes in them. They're correct. These violations that I'm talking about right here are non-compliance with Oregon-specific things. So that's why there's a little bit of discrepancy.
But they're not like dishonest things, or that things are wrong, or money's not, you can't find money, or it doesn't balance the way it's supposed to.
Correct.
With the bank statements, right?
Correct. But now I want to draw your attention to the next paragraph. So you go down to the internal controls. So For financial statement purposes, when we do an audit, there are internal control deficiencies. And there are two different types of reportable internal control deficiencies. And one of them is a significant deficiency, which means that it's, an internal control weakness that we found, but it doesn't rise to a level that the financial statements would have been materially incorrect if we didn't find it. Then the next level is a material weakness. And what a material weakness means is that if the auditor hadn't came in, the financial statements would have been materially misstated because there was a problem and an error in those numbers. So unfortunately, we have a material weakness for the city of Gladstone, and it's 2017-1, and that is the extra piece of paper that I handed out. And so what this is called an AUC 265 report, for those of you who are familiar with auditing language. So what it is,
What was it, AUT?
AUC, AU-C is how it's done, AUC 265.
Thank you.
Yep. It was formerly a SAS 115 report is what they were called. And so what we found is that controls were not in place to ensure accounts were reconciled at year end. Audit adjustments to the financial statements were found that in our judgment may not have been detected except through our auditing procedures. The existence of such material adjustments indicate that system of internal controls did not detect and prevent such errors. Management should address inherent limitations in the internal control system and modify their oversight function accordingly. And then on the next page, we have management's response. The City of Gladstone will be implementing quarterly reviews and year-end closing procedures to ensure all necessary reconciliations of accounts by qualified personnel. This will be accomplished with the proper implementation of GASB statements as applicable to the city's annual financial statements. So in our opinion, that is an accurate response for management. We don't believe that it was being done necessarily in the fiscal year ending June 30, 2017, that it had been done, unfortunately.
Say that again?
So,
I know you're being careful, I can tell.
unfortunately, we don't believe that that was being done for the fiscal year ending June 30, 2017. This audited financial statement.
The double
checking.
Okay, that's okay.
And specifically where this came about is the accounts receivable subsidiary ledger, which is basically, so it was for water and sewer. So when everybody gets their bills in the city of Gladstone, basically a bill goes out to Mindy, and so you get your bill on the books in the subsidiary ledger. It says, okay, Mindy owes us X number of dollars for her bill still because she hasn't paid us yet. Once you pay us, then that account's receivable goes off the books. We recognize the revenue, the cash goes in the bank. What happened is that subsidiary ledger had a different number than the trial balance that we were auditing off of. And so we had to have the city make a material adjustment to that for the water and the sewer.
And how much money was that?
It was, it was in favor, actually. The city, from what it looked like, the city was underreported on the revenue. It was a total of $45,918 in sewer, increased receivables, increased revenues,
okay,
and $21,184 in water. Again, increased receivables, increased revenues. I don't.
We don't know.
Yeah, we don't know. So much of it could have had going on with the conversion. I did find several entries. Tanya did also too, where debits were posted as credits and credits were posted as debits. So there were various turnarounds that had happened.
So the work just wasn't being done properly.
Correct.
So these two numbers down here on the bottom in the water fund and the sewer fund,
that's something different.
That is different.
Yeah.
Oh, okay.
Yeah, that's different entirely.
We don't get to spend
That's
that
another
money
issue.
there. Okay. Well, here, I'm trying to help you
Yes,
out here.
yes.
Trying to find you some money.
But
Gotcha.
that is, we were just working with Encode today. We have, the utility billing trainer is going over things again at no cost with the utility billing clerk. And she was showing me the reconciliation report that's off of Encode that ties general ledger into the subsidiary ledger, and it's wonderful. It's excellent. We've got an excellent tool to be able to stay on top of it at all
Because
times.
shouldn't you be able to see, shouldn't you be able to look at it every month and get her report that says $50,000 came in, and you can
can.
see that it goes into the bank?
But do remember, there's a lot of ins and outs, with something like this, and we're billing for water, sewer, and storm. There's also the
Do they split it up when they put
oh
it
yes,
in,
it's
when they
all
put it in the
split up,
book?
but there's a lot of adjustments going back and forth. There's a lot of input. In a city, even a city the size of Gladstone, there's a tremendous intricacy to governmental accounting that way because of the funds, because of the constant activity.
But why
back
is my
and
water
forth.
bill going in, and why does there need to be adjustment to it? My water bill should be
Well, we have people
those
that-
three things,
yeah.
and those are the things that should go in.
into the revenue
Into the
buckets. When
revenue.
it's billed, you have your accounts receivable and you have your revenues. But then you have people who come in and have water leaks, and there's adjustments to those. You have turn-offs, you have prorated bills, you have, various things.
You have
all
people
the
who
way
don't
through.
pay.
People who don't
Goes
pay.
up with a $998.44 water bill.
Yes. You have
Back a
late
couple of months
charges.
ago.
You have, yes.
Who was that?
There's
Me.
a-
What'd you do?
I got a new meter, and they forgot to make adjustment in the software.
Mm.
And you know what's really funny? I didn't even notice it. It was Elizabeth. She turned white, and I'm like,
Well, I would too.
what do you got there? Give me that. Now, then so I went home and I said, hey, quit drinking so much water, huh? We're not watering the lawn this year. So, yeah.
So anyways, now we do
Okay, I-
have
I-
a
I
report, and
think
we even
about those
receive
kinds
the
of things.
report actually daily. So that will help to reconcile cash, et cetera.
And we're not sure that it didn't happen during the conversion either. So, we don't know exactly why it happened.
But we now have systems in place that will show that if you're
Monitor
off.
it.
Correct.
Because I always believe, and this before I got involved with Gladstone or anything, but I always thought when all that money went missing from West Lynn, that people just weren't, the city council people weren't reading the financial statements, if they have a manager or whoever they had nobody was reading any of the information, or she couldn't have gotten away with what, $1 million?
$1.3 million.
Yeah,
They weren't having audits.
if they weren't.
They weren't, there were lots of control deficiencies there that
People just weren't doing their job. And every time those kind of things happen, I just go back to somebody isn't doing their job.
I agree.
So how long do you plan to stay? Because part of this is our
I want that
promise
answer
as
too.
a city to saying to the state of Oregon that we're gonna do all this, but
Yeah.
if you leave, we don't have anybody to do all this.
Well, I'm not the only one in the state who can do this, needless to say it, but no, we have no plans of departure.
Okay, well, I'm just asking. That's a fair question, I think.
Yes.
Well, go ahead, Neil, but
I was gonna. Can I go back a year? So you did our audit year before last.
Correct.
So how do we know that that's accurate, being that we have the same person was running the finance department?
And we didn't have
So
the new
for-
software.
For the June
Well, yeah.
So for the June 30, 2016 financial statements, there was an external consultant that was helping at that time as well.
Okay. So you're confident that? Okay.
And we had the support. And it was the old system too. So there wasn't a conversion added in there. So I'm confident that the June 30, 2016 financial statements are not materially misstated.
Okay.
And when I came in, I went through the June 30th, 2016, did the standard comparisons between financial statements to the trial balance, et cetera, and everything was in line. So I say it was really a perfect storm that hit this 17.
Yeah. So, are you done? I've got a few other questions. And don't
Yeah,
let me hog.
No.
Go ahead.
I just wanted to make sure that everybody understood about the reportable finding.
Is the state of Oregon going to be unhappy? Well, you're going to find out about that one line item, and then we have to submit this and hope that they still like us.
So, okay, so for the budget violations, so those minimum standards ones that are listed back here,
Yes.
1, A, B, C, and then 2,
Yes.
those ones, the state is not going to care.
Oh, okay.
There's no budget police that are going to be coming after the city. There's no such thing. They're going to care about this because this is a material weakness. But what the city will do is they will approve a response to this and send that into the state. And then the state will say, okay, we don't want to see this again next year. So then the city will do fine, not have a finding next year, and they'll be fine. They'll get a letter saying, okay, we want to make sure that you do what you say you're going to do. And there's still no police for that either. So the Secretary of State oversees the municipal audits in the state of Oregon, but they don't really have any teeth.
Right.
I mean,
But-
you'll get letters from them. The only thing that they can do is that if you do not submit your audit in a fiscal year, then they can start withholding your state funding
Okay.
for cities. But
And you
that's
get on
really
the
all
list
that.
on the website too.
And you
if
get
I
on the
saw
list
that.
of the website, correct. But you'll also be listed that you've had a finding, but then you'll have the list that there's a corrective action, that the city's taking corrective action for that.
Okay.
And so,
And is this the one that could impact our interest rate for our urban renewal financing?
As long as we're showing a corrective action and we should be fine with
Fine,
this.
okay, and that's
But
what
it's not-
concerns me, is
yes.
our ability
Yeah.
to borrow and credibility, so,
Mhm.
okay.
Yeah.
Because if we show that we have a new accounting system and that we have new people and systems, that,
Yeah.
And the corrective action has been
What is
implemented,
your
the
guys' credit
reconciliations and all the things that
Haven't been.
Well, we're working on that. We're just completing this now.
Okay.
And, so identifying the areas
Right.
of concern. And, however, it's nothing that is daunting at all. It really isn't. It's just attention to detail. Yeah.
Okay.
Go, Neil.
let me just do one quick thing on the Gladstone Urban Renewal.
Yes.
Oh, for sure.
So if you look at page 18 on the Gladstone Urban Renewal, you see the same report that we just went over for the city.
Oh, at the back.
At the very back,
Okay,
yep.
gotcha.
18. You will
Mhm.
notice that when you flip it over to page 19, there is nothing. So there's no violations for the city's urban renewal. And then also, if you go down and look at the internal controls, there is not a finding listed there because it was not the urban renewal agency. It was the water and the sewer fund that had the two problems. So,
Okay.
And we have money in the bank, I've seen it. This is the one that I've been paying real close to. Yep.
$6.5 million or something like that, or, no, it's more than that, isn't it?
6.7.
As of June 30th,
Yeah.
it was it's over 7 now.
do you hire somebody to do your payroll?
We do it in-house, and that's part of the conversion that we've done too. We brought that in-house and have somebody that does that.
That might have played a part of this, because over the last years, or sometime within the last 2 years, there for a while, we did contract it out during the conversion.
The payroll, of course, is reconciled every quarter, with quarterly filings, and it is all done in-house, and it's an excellent system. so no concerns there.
No,
Yeah, just,
I
yeah.
always think if companies can do it themselves, it really is cheaper than
I
hiring
would wholeheartedly
and
agree.
waiting
I'd
a
prove
week
that
and
out.
getting it coming out of a
Yeah.
some account you don't know, yeah.
One of the things that's a little bit difficult for cities in particular is police and fire, because they are dependent on, you may have a supervisor that's not there, and then somebody that's not a supervisor gets paid at the supervisor's level, and so payroll for police and fire gets really tricky. A lot of times that's probably one of the biggest complaints that we get is from police and fire, that they don't understand their payroll because it's constantly fluctuating. The dollar amount that they're getting paid, because it's usually union contracts, and so it's like if you're working at this time to this time, then you're getting paid a shift differential, and if you're working from this time to that time, you're getting this. And so it's that piece of the payroll is really difficult, and a lot of times external entities, even large payroll companies, screw that up because it's very difficult for them to do that.
But our accounting system has a good,
Yes,
has that.
because it's a government accounting system, and so it's specifically set up for all of these different variations that happen within government entities, and specifically for cities. Encodes have really good accounting software, and they have a good payroll system. Okay, we're ready for your questions now.
The fire department fund, why isn't it included with the others? It's kept separate.
You have to say what page
Page
you're on.
12.
Are you
if
talking about the levy?
Yes.
Okay, the levy is a special revenue fund. That levy money that comes in has to be used only for those specific purposes that are called out in the levy. And so that's why we keep it separate from the fire department that is within the general fund.
Okay.
It's
So
on
then why
page
isn't the
68.
police and communication special levy fund not done the same way?
It is.
No, it's not.
It's a separate fund.
It
If
is.
you look online, if you look on 5, it's listed police and communication special, police and communication special levy fund. You don't find a fire department fund listed there.
What page did you say? I'm sorry.
5. If you go over to page 18, you've got all the special funds listed, but you don't have the fire department.
We have a distinguishing factor within governmental accounting as far as when it comes to the reporting. We list our major funds and our non-major funds, and the non-major funds get combined. The fire levy is one of the other governmental, and it shows fire and emergency services special levy. So that is over here under the other governmental, where the police
We're looking
and
at page 17 and 18.
Yeah,
Right.
17 and 18. You'll see police and communications special levy fund is listed
Yeah,
separately.
no, I understand that.
Yes.
So
So they are separate. They're handled exactly the same. They're
So
special.
why isn't it listed on 5? Why I'm asking is it looks like we're hiding something.
Okay.
Because
Well-
it's
probably
kept
listing major
kept
Okay,
separate.
we will clarify the verbiage there. Obviously, there may be something in the verbiage that
Well, I mean, 'cause
seems
do you-
to be, because it does say police and communications special levy and civic buildings capital fund, but it does not
5.
list individually.
That's because it's a major. It's saying that it's a major fund.
These
So-
are the
So
major.
if
So
you
and
look at
what's
the
the
next
difference
sentence-
between a major and a minor?
It's a percentage.
Yeah,
So-
dollar amount.
So
what-
this is a government, so the Government Accounting Standards Board sets what's a major fund and what's a non-major fund. And it's the percentage of total revenues over the individual fund. So the individual fund's revenues divided by the total revenues for the city. Same for assets, liabilities, and then expenditures. And it's a percentage.
Do you know what it is?
It's 5% of assets and liabilities and 10% of revenues and expenditures.
Because you're looking at, a little over 500,000 on the police and almost 2,000, well, it's 2,400, 247,820 for the fire.
That can change from year to year. It changes depending upon what those percentages are. These are prescribed to us by GASB, Governmental Accounting Standards Board, as far as how we have to calculate it. we have a choice of showing all funds as major funds, but for statement presentation purposes, usually you'll see the major funds that truly qualify and then the non-major funds aggregated. So that's why the fire levy is not called out
On page 5.
on page 5, because it qualifies as one of the non-major funds.
Because you can see on page 5, it says all of these funds are considered to be major
Major
funds.
funds.
And
Yeah.
so that's just an accounting,
Standard that, as far as governmental accounting.
GASB 34 was the one that created that, Government Accounting Standards
And
Board.
give us 5
34.
years and I'm sure they'll change it again.
We're working on it right now.
Yeah.
Well, they
but
are.
It's just one of those semantic type things.
But both funds are presented in the financial statements. So the Police and Communication Levy Fund is presented on page 57 for budgetary purposes, and then the Fire and Emergency Services Levy is presented on 68. And that's the main difference, why one's in the front and then required supplementary information is because it's a major fund. The Fire and Emergency Services is presented under other supplementary information because it's a non-major fund. So that's why they're put in different places in the financial statements. It's just based off of the government accounting
So
standards
is it
requirement.
possible to go into page 5 and simply note where those 2 items that you're talking about are?
Well,
Is that just asking a lot, or?
it would be abnormal.
Okay.
Yes, it would be, because even though Gladstone only has 2 non-majors, there are
Right.
many entities that will have a list a mile long of non-majors. So
Okay.
this is why,
Okay.
they've tried to streamline where they can, which is not much, but
Okay.
they have tried to.
Because the 2 non-major funds are the Library Capital Fund and then the Fire and Emergency Services Special Levy Fund.
And as they say, next
What
year
page is
that
that
may
again?
change entirely.
Page 68 and
because of these
69.
classifications.
And that's just dictated by GASB, how those are calculated and where they're presented.
Okay. I'd like to go to page 9. Are you past that?
Yes, so.
Okay, so on page 9, on the 3rd paragraph, we are not selling a piece of property for $3 million, and we are going to incur a long-term debt of how much, Jackie?
We were, 6.8,
So that
broken out 3 and 3.8, but I wanted to see where you're at here.
Page 9, it's the 2nd paragraph up from the bottom,
Yes.
or the 3rd paragraph
Oh,
down.
sorry, my book from home is marked up, so, yes.
This paragraph, when the consultant wrote it, this paragraph was based obviously off of the budget. So it is, that's where the source came from. But you're correct, as far as the sale of properties of approximately $3 million, that is no longer applicable.
You guys are killing me.
That, Jackie, what would you like to do as far as we can flag it? We can change this one paragraph to show that funding sources will include urban renewal funds of $5 million and incur long-term debt of the $6.2 million.
Right,
And take out that sale of properties of approximately $3 million.
Yeah, how do you want me to change
Yeah.
it, Jackie?
Yeah. I think basically what we just need to do is take out sale of properties of approximately $3 million.
Okay.
And incurring long-term debt of
Yeah.
6.2.
Just that whole sentence, or the end of that sentence?
No, not the whole, just sale of properties of approximately $3 million.
Okay.
There. So it will read, for a total of funding sources include urban renewal funds of $5 million and incurring long-term debt of $6.2 million.
Can you just say funding sources include urban renewal funds and incurring long-term debt? Or do you have to put the actual, because the dollar amounts, do you want them exact, or?
Well, that'll get to 11.2, and then we've got 11.2 in resources. It's desirable to show that, you know, you've got your expenditures, your resources are there to match the expenditures. So that would...
That's fine.
And these are definitely estimates.
So I
I
guess...
just want to make sure that mine matches yours, since this is the one I'll use to fix it.
Funding sources include urban renewal funds of $5 million.
Take out the sale of properties approximately
Incurring of
3
long-term debt
of 6.2 million.
Yeah. Yeah. And we could put approximately 5 million there.
Okay.
Yeah. And then that will balance with the resources that are showing. And again, this is economic factors in next year's budget, so you know, very, very much an estimate.
Right. No, I understand
Yeah.
that.
Can I jump back to the,
only 10.2
list of officials?
7.2.
Can you give us
and
a
4.
page?
That very
That's
page
11.2.
All right.
And
One.
the 5
Well,
and the
Right.
6.2
well,
would
I know,
be
yeah, give you
11.2.
right.
It's an I,
Sorry.
That's all right.
You're right.
because I think there's
Sorry.
initial favors.
Is it
Okay,
right?
I just thought
what
it'd be
now?
nice to have a title like we have on the urban renewal.
Sure.
We'll do much of these in-house next year, so.
I don't care.
I've got to
I just-
redo them
I
for the
just- I'm just
biennium
afraid-
anyway.
I'm just afraid Jackie's going to be getting them at 11:59, and she's going to be like,
I see,
Tanya,
on
what
this
are
one,
you
got
doing?
If you, I guess my question, I'll be lenient with what you need. If you need 2, 3 o'clock
We'll
tomorrow,
figure it
that's
out.
fine. But I guess getting back to like Ann said, is there a reason why the judge, fire chief, and police chief are on that page? Because they're not on the urban renewal?
So that's typical, because the urban renewal typically the urban renewal is not tied to like the police station and that kind of stuff, and so typically usually it's not even city administrator, usually it's like agency official or something like that.
Agent of record.
Agent of record,
Mhm.
because technically the urban renewal agency is separate from the city based off of Oregon legislation. And so usually they don't recognize it as a city administrator or city manager. And so typically, usually the police chief has nothing to do with it, or the fire chief,
No,
or the
I'm saying,
municipal
do
judge.
we need to have them on the cities? And because I've got more department heads, and I'm just wondering why those 3 were chosen to be listed.
Because they had been listed in the past. I mean,
No, I like your
I
your
mean, we can
question.
take them off.
Either they should
Either
be all or none,
it should
probably.
be all or
'Cause that's, yeah,
none.
it's not, it's not fair to the others.
So, I would just say remove those 3, unless you want to add more, and I think it's easier to
Yep.
remove,
no, I agree.
to make it consistent with both.
I was also kind of curious about the order on this one of the council members. Is there a reason why they're just in any particular order? Because I thought maybe it'd be like by the term or something like that.
It's by
Or does it
position.
matter?
If you
Oh,
notice,
okay.
so from left to right, you've got 1, 2, 3, Michael Milch. That's how you're elected, or your number, number. I'm number 4, and then you got Pat's 5, Tom's 6, and then the mayor is in the middle. So, I mean, technically, and we have moved seating up there because of different reasons. But this is the numbering system that's in the charter that it's in, that you know, I put number 4, I ran for position 4.
Okay. No, that makes sense.
Is that, yeah?
Yeah, thank you.
I know.
They really can be in any order, though. The state doesn't care.
Or, actually, that's not,
No,
That's
that's
not
not
their
the case.
order. They're just
I just saw
there.
the top 2.
one's out of order.
Yeah. They are all up, yeah. Have no idea then.
Okay.
Sorry. I just saw that Michael was at top and Michael was over there. But, you know, that is true about how we get
That's
elected
how-
though.
yeah.
And how we're sitting right now. Sorry. Well, anyway, take my foot out of my mouth on that one.
Okay, next page.
So I also had a comment on page 4, at the bottom of the financial highlights. I think that should be 257,586. Okay, so my computer just died, so all my notes are now gone. Unfortunately.
Is that some of the Excel new math?
I think what I looked at was, I just matched the 11 million that's reported here with what was reported in last year's.
I see.
And took the difference, I think.
I think that's increasing fund balance, but I don't. Let me look before I speak.
I have 2016 right here.
Okay, so it's coming from page 18. It's the change in fund balance.
Which many times there will be
But
slight rounding.
sometimes there's rounding errors or something, but, so that's where that's where that number is coming from, to be consistent with what's being reported on the financial statement.
And then on page 5, the second paragraph, there's in the second paragraph on the bottom. That last sentence.
In the, there, let's see that.
So is there harm in listing when it says from the other 2 non-major in parentheses, list them fire? I mean, is that what you were wanting, was the actual fire word in there?
The only non-major we have is the fire, correct? I mean, everything else
No, there is also the library.
I mean, you could just put
There's
it
2 of them. The Library Civic Center Fund, the
Library
Library
Capital
Capital
Fund.
Fund.
Oh, okay.
Yes, there are
So-
2 of them.
But, I mean, personally, I think we should have them all together when we can.
Well-
But, I mean, you know, for transparency. But, I mean, if the, you know,
Well, I
gap
would-
rules or whatever rules say that, you know, we gotta do it a different way.
We can go ahead and parenthetically show them after where it says 2 non-major governmental funds and then list
Put
the
the
names
names
of them.
Oh, okay.
Okay.
Yeah, that's
Oh, that'd be
just-
perfect.
Just
Okay.
so that
Thank you.
Mhm.
it's
Put 'em in
showing
parentheses,
fire and
so-
library capital, yeah.
Thank you.
Yeah, since we have to change that page anyways, we might as well just fix it.
I appreciate it.
Anybody else want flags? I probably have more in my bag if anybody else wants flags.
I've got highlighters if
Okay.
different colored pens. if you
I
like.
probably have highlighters too and flags if needed. Okay.
Post-it.
I'm ready for more questions.
Anybody have any between 5 and 12? That's kind of my next one, I think.
Are you in the financial statement 12 or in the front section 12? That's where
I have no idea.
Oh, good to know.
Because I'm looking at at what we got last.
That's a report. Could you just tell us the header of the report?
It's a
On the-
statement of activities.
Okay,
So would that
Okay,
be?
that's page 12. Yeah, page 12
So it'd be, you know,
in the report.
I guess in the
Yeah.
reports part.
Can I
the
look at
report.
what you're, can I look
Okay.
at yours really quick? I just
Yeah.
want to see what you're referring to when you're saying 2 pages. Okay, so this is the Urban Renewal Agency.
Oh, got it.
So you can look at the title right here.
I didn't even
'Cause I was
realize
like,
I had that
I was
in
like,
there.
I don't understand how she has 2 pages. I was like, I'm very confused.
Because I didn't even remember I threw it in there.
No, that's fine. I just wanted to make sure that I was
You're right.
understanding. I was like, there shouldn't be
Sure.
2 page 12, so I was just
I'm so
confused for a
smart.
second. No.
So 2 questions. One,
Yes.
charges for services.
Mm-hmm.
I'm not really sure, because you've got a column, general government, public safety. That's
Mhm.
something else too that was really hard. I ended up getting a bookmarker to be able to read across a
Yes.
lot of these.
Yes,
So if they were,
difficult.
So
if
once
they
it's
were, if they were,
printed,
mhm.
it will be on 2 pages, and it'll look like this.
It'll be mirrored.
Well,
Yeah.
I'm talking about even on 1 page, but that's just me.
Yeah.
I like, like on your Excel where you can
The
put
lines.
yeah. So but like I say, that's just a personal preference. So I was just curious what the charges for services entails, and also what's this report tell us?
I'll let you answer this one.
What are you trying to tell me? I mean, I've read through it like a dozen times.
Okay, I will.
We mentioned GASB 34.
Okay.
No, we'll start with this.
Yes.
Okay, so the most confusing part about government financial statements is we have 3 different bases of accounting. What that means is that we have government-wide financial statements, which are pages 11, 12, and 13 in here. So that's page 12 and 13 are the ones that Neil is referring to right now. So, government-wide financial statements is the entire entity for the city of Gladstone, and it's on a full accrual basis. So what that means is that it includes all the debt, it includes all the capital assets, it includes the pension liability, all the pension stuff. So this is a full accrual basis. Then we go back a couple more pages, and we start on page 15. Page 15 through page 15 through 19 are the governmental fund financial statements, and this is on a modified accrual basis, so it's somewhere between cash and full accrual. Then we go to page 20 through 23, and this is a full accrual basis as well.
Right, this is the water sewer.
This is the water sewer, so this is proprietary. So that shows all the debt, all the capital assets. But for the governmental funds, we don't have a full accrual with the exception of those government-wide statements, which are page 10, 11, 12, and 13. Then you go back even further, and you get back to the required supplementary information, which starts on page 52. This is what we call the budgetary basis of accounting, which is not a full cash. It is a quasi-modified accrual cash basis that is dictated by the Oregon State Legislature.
And these are only major funds.
No, this is all.
Required supplementary information, yes. But then once you go back to the other supplementary, it is also a budgetary as well. So other supplementary starts on page 63. And those are also budgetary basis.
And those are the non-majors.
Right.
So we have 3 different bases of accounting in the financial statement, so it makes it very, very confusing. And this is all dictated by the Government Accounting Standards Board. This has nothing to do with the City of Gladstone's preference or anything. This is how government accounting requires us. And like Kathy referred to, GASB 34 was the one that created these lovely statements and then created these government-wide financial statements. So, back to Neil's question.
When Kathy does our books, they're all done on an accrual basis.
No, they're basically, we basically run them on a budgetary basis so that we keep things in budgetary compliance. And it's a mixture of cash and modified accrual throughout the year. Then towards the end of the year, that's where we do our year-end adjustments to bring them into either a full modified accrual or a full accrual basis.
So back to Neil's question.
What's that?
What is page 12 and 13? Well, this was what the Government Accounting Standards Board decided our income statement would look like. So this is essentially an income statement. So if you're used to non-government, it's supposed to be your revenues and expenses and your net income.
Gotcha.
That's what this is supposed to be, and this is on a full accrual basis. So this includes all of the, I don't want to say this because I'm afraid it'll sound bad. Like your debt payments are not included. You don't see that as an expense here because it's taken off the principal of the debt.
So it comes off the
So it comes off the statement of activities, page 11. Yeah. So this is supposed to be the income statement. It is a very confusing, weird, L-shaped, quasi-financial statement. The expenses are listed over here on page 12.
And that's normal to have it.
This is government. This is the way that the government. This is just the way the government. This is
one statement.
Yep, just this one statement, and this is the way that the Government Accounting Standards Board has dictated. So if you go look at any government entity that's following GASB, the state of Oregon allows you to do different things, but this is full GAAP. This is what the accounting standards do. So the expenses are right here. Normally on an income statement you would have revenue first and then expenses. This is a very, very strange format. So expenses are here. Charges for services is revenue. So that was one of your questions, Neil.
Yeah, so like the $966,000 plus under general government, what would we be charging?
SDC charges.
Oh, okay.
So system
right
development
away.
charges.
A lot.
It
Right,
can
what's
be
that?
like
It encompasses a
Oh,
lot
right
of
away.
the different revenues.
right
Okay.
away,
Yeah.
yes.
And then the 345,000 plus would be the levy under public safety.
I'm not sure.
I'm just
That may be court fine. I'm not sure. We'd have to
Court
Okay.
fines,
investigate.
who are we giving tickets to?
no.
They're expensive.
Here, I might be able to.
I'm just
So,
curious
one thing I wanted to
because
mention.
I try
Yes,
to find
okay.
where the numbers.
Yeah,
You
and if
can't
you
find
And I
it.
want you to know it does look a lot easier on 12 and 13 this
Together.
way
Yeah.
rather than trying to
Right.
put back and forth.
If you go to page 17 and 18, this is your statement of revenues, expenditures, and changes in fund balance for your
Mhm.
governmental funds. And here you'll see, you list out the revenues, and it's very much more broken out
Mhm.
and much more explanatory.
Okay.
And the,
Well, that's-
and the
okay,
same with
that's-
the expenditures. Now,
that's-
this is only for the
Okay.
governmental funds. It doesn't have the proprietary
Right,
funds in
the-
here.
And they're not dollar for dollar because there's
Accruals.
the difference
Mhm.
between modified accrual and full accrual, so some of those numbers are taken out.
Yeah.
So that reconciliation to go from this statement on page 18 to the front one is on page 19.
Yes.
Yeah.
So all numbers can be tied back. It's
So for example, if you look at page 18, the net change in fund balance, so if you go to the far right on page 18, third number up from the bottom is negative 257,000. So if you flip over to page 19, that's the net change in fund balance.
And that's
at
the
the
one
top.
you saw back on, what, page 4 or 5, yeah.
And then, if you go down to the bottom, the change in net position of governmental activities, it's at 69,137. That number matches on page 13, the change in net position. It's kind of on the left-hand side, third number up from the bottom.
so it matches the governmental funds change in net position on the full accrual basis. And
Do you
this,
see that? Does everybody see that? How it's
Yeah, right there.
Yeah.
and
Okay.
this reconciliation explains what we've added and subtracted to
Mhm.
get from one number to the other number. And all
Okay.
it's doing is basically changing from modified accrual to full
So
accrual.
for example, capital assets are not listed on the governmental funds.
Right.
So when you go up to the full accrual, capital assets are on those government-wide financial statements, so that's one of the adjustments. Debt is another adjustment because debt is not on the modified accrual, but it's on the full accrual. Pension, there's a few of these, like, it's just an accounting exercise essentially. But to answer your question, Neil, about the charges for services, the $345,000.
I understand now.
You can see it in fines and forfeitures.
Right,
It's-
right.
you
Well,
can
now I
see
see,
that
now I see the connection.
how it goes
'Cause-
together?
Yeah, 'cause
Yeah.
I didn't find that, it didn't say in here, see page 7 and 18 is where,
So, and then, then the other thing about page 12,
Mhm.
then, so the top part right here is governmental activities. So this part should tie back. I mean, and you can see where the 69,000 ties back. So this part ties back. Then down here you've got your business type activities. These tie back to the business type activities. It ties back to page
The enterprise fund?
21 and 22 for the enterprise funds or
Gotcha.
proprietary funds.
Sure.
And so you can see on page 22, the change in net position, the 247,374, that ties back to page 13, the change in net position. So the proprietary funds or the enterprise funds, those are a little bit easier because these statements here, page 21 and 22, are on a full accrual basis. And so they match. It's presented a little bit differently, but they match the government-wide.
You don't need that
it's
reconciliation.
the governmental ones that are on the modified accrual basis, and so it makes it very confusing. And so, just to finish walking you through this statement of activities, so then you have your expenses right here for the business type, then you have the basically program revenues. Then we have some general revenues down here that are listed over here. They're right here. These are the governmental and these are the enterprise. So you have a few of the revenues down here as well. One thing to note is this transfers in and transfers out. It nets to zero because they need to be transferring in between each other. So the 129,000, there's a positive in the government and then there's a transfer out of 129,000 in the enterprise funds or proprietary funds. I know it's very, very confusing, and then you get down here to the change in net position. That's basically net income.
Which is down from the year before.
Correct.
Okay.
178,000.
So, while I understand what your job is to make sure that everything that we say we spent money on is correct, not necessarily what we spend money on. I understand that. But my question for you is, when I looked at the audit from last year and I look at the audit from this year, like, under this business type activities, the top number is 48,821 and then the lower number. And in the year before, it was completely switched. So I guess I'm not
Hold on, I need to see which number you're looking at.
Okay. These two.
Okay.
And I
So
wish
that's
I
just-
understood it,
okay.
but I don't.
Okay.
Okay.
So, okay, so what she's looking at is she's looking at the statement of activities for the June 30, 16 compared to the June 30th, 17.
So it's not the whole year, it's 1 month?
No, this
No.
is
This
for
is
the
the
end.
year.
This is year end, yeah.
Okay.
So these numbers right here are coming from the business type. So you have to look at the details, you're going to have to look here. And then this year, keep flipping a little bit further, a little bit further. Okay. So to see kind of where these differences are, you have to look at these individual numbers. So you can see that revenue is down a little bit. So last year total operating revenue was 1.5 and then 2.3, and now it's only 1.1 and 2
Right.
million. And then the expenditures are a little bit up, but barely for the water fund. And then
Mhm.
they're up a lot more for the we're up more last year for the sewer.
Okay.
And then this is interest, so those should be the numbers that are down here.
That's interest over there.
So part of it's up there and part of it's down here, so that's why. So this just means that for the top part, the way that it's presented, program revenue over expenses, there was more revenue than expenses of $357,000, and then a negative 45 here. When you look at this year, there's only 48,000 because revenue was down.
Okay.
And then same with the sewer fund as well, because it was 2.4 and now it's only 2.
So that's in the whole $237,000?
Most of it, yeah,
Oh, good
is
to
coming
know.
from that.
That also
But-
could be due to capital outlay if they had made, have more capital improvements
Oh,
in
okay.
the year.
A
But
lot of it's the pension.
yes.
So let's talk
Yeah,
about that
let's-
for a second,
yeah.
because a lot of it's
Mhm.
the pension.
Pension expense.
So if you look at, sorry, I left my copy over here.
'Cause I need one more, right?
I know. Sorry, trying to add to your pile.
Say if I can
Okay,
join you,
so look
please.
at page 11.
11.
So look at page 11.
Yeah.
I highlighted those right
Liability.
here.
So, can I look at your 2016 from last year?
Absolutely,
Okay.
'cause that was one of my
Here.
questions. Go to page 12 you need to go to.
Okay. So, page 11, the pension liability, it's under
I didn't
non-current.
grab, I didn't even think to grab last year.
I didn't think to bring it either.
I've got a copy of it here if you want to look at this. This is last year's.
So net pension liability for 2017 is $5,600,000. So it's about halfway down in the middle. Do you guys see the 506?
Under non-current liabilities.
Yep.
Yeah.
Okay.
Right
Third
there,
column, total.
Yeah.
Okay.
Got it. Everybody see that number
Yes.
right there? So what number was that last year, Mindy?
$1,907,695. $1,907,695.
So
That's like a
Wait a minute.
this increased,
Oh, okay, we're on this, yeah, okay.
so this increased by almost
45.
45, yeah, $4.5 million. So a lot of the difference that you're seeing in that change in fund balance is due to this increase. Because to make it balanced, it's being pushed through on the income statement. This is purely, so the net pension liability, the best way to explain this is, so this is PERS, right? Everybody knows PERS has this huge liability. Most people have been hearing about it on the news for years. There's this huge pension liability. Well, about 3 years ago, the Government Accounting Standard Board said with GASB 68, we want you to put this pension liability on your books. Great. How do we know how much this is? So they have actuaries who go do the science, how long people are supposed to live, how many years they're going to be on retirement, how much money it's going to cost the citizens, and so they come up with this calculation. I like to think of it as a black box because, you couldn't really, it's not accurate. It's an estimate. It's the largest estimate on the city's financial statements is this pension liability. So then they have us put it on the books. So all entities in the state of Oregon had to put it on the books. Well, the first year, guess what? It was a net pension asset. Who in this room believes that 3 years ago it was an asset and now it's $5.6 million liability? It's all based off of the numbers and how that's calculated by the actuaries.
Do they calculate it every year for,
Yes.
at
So
the end of a year, or?
Yes. So the state of Oregon pays
Milliman.
Milliman That's the actuary that they're using. They pay Milliman to do the calculation that the actuaries have all agreed upon as how they're going to calculate these liabilities. I don't worry too much about this specific number. We don't know how much it's going to be. If you look at page,
I thought this was how much it was.
this is
For
how
this
much the
year?
actuary,
It's an
that's how
estimate.
much the actuaries say it is. It's an estimated number of the future liability that the city will have for all of their retirees.
Future liability.
That's why
That
it's-
is not the check that
that-
we wrote to
That is
PERS.
because it
No.
says, that's
Okay.
because it says non-current liabilities. This is a future liability, so it's just like debt, it's a future liability. We don't know exactly how much this
Right.
liability is going to be.
So basically what it is, if I may, and if I'm wrong, please.
Okay.
So, when our employees retire in the future, they're saying we're gonna, we're gonna owe $4 million or whatever it is, more, or $5 million this year versus the 1.9
Last year.
last year. So,
But it's the
you know-
money we'll pay out,
We know that we have this liability in the future because at some point, my employee is going to retire, and I have to pay them something, some benefit for their service, and it's gonna be a factor of something. So what the actuaries do is they go through and they say, based on a variety of factors, mortality rates and service and all these different factors.
Salaries, et cetera.
Salaries.
Mhm.
They say based on all these things and interest rates and everything else, this is what we think you'll end up having to pay based on where you're at. And that's why it'll fluctuate every year, because every year they're gonna have to come up with new.
And there's a different number of retirees and things like that.
You have
But the
turnover, you
city-
have different demographics, et cetera. You lose employees, you gain employees. There's so many factors that change it up every single year.
But does the city do it I do
We-
it for a client that we just send in our retirement, and pay the 3%.
Our annual
and we send
required
it-
contribution, yes, and
You
we
do
fund
that?
that every
Yeah.
single year, 100%.
So that's what I was gonna show you
Yeah.
next, is on page 60 of the financial statements. Sorry to be flipping around.
You're
It's
fine.
So page 60, so there's a statutorial required contribution, which is column A, and then there's a contribution in relation to the statutorial requirement contribution, which is column B. So you can see that, and then the next column over is contributions, deficiencies, or excess. The city is contributing what the state says is required to be able to cover that liability in the future. So they're paying what the state says to cover that 5.6 million.
So you don't send the money every month for what you pay? Do you?
Yeah.
You send the money
Yeah,
every month?
After
And this-
payroll's completed, yeah.
And this is the amount for June 30, 2017, they paid $354,011 in PERS payments.
Based on our covered payroll of 3.5 million.
So that was
Yeah.
that was how much we paid that year.
Mhm.
Yeah.
And that's supposed to factor in the future liability as well. So I don't get too concerned about having that large number on the financial statements, because it's an estimate, it's not an actual number. As long as the city is making what the required contribution is, then they theoretically will be able to cover that liability.
And I think that's a really good statement to make at the council
Yes.
meeting next week, because there's been a lot of discussion with PERS lately and how our city's gonna pay for it. Gladstone's in better shape actually than our school district is got some serious issues with PERS, but if you can just make a note to maybe talk about that.
Yeah, I
that
usually
would be
always
great,
do.
because the average person might think $5 million is what we paid out in PERS or what we owe.
Well, doesn't the money come, I guess I don't understand PERS, but,
Very complex.
doesn't PERS pays the people? Once
Yes.
somebody,
Right.
Yeah.
So-
But we have to fund PERS.
but aren't we funding it every month when you're
Yes,
doing
with
it?
this,
Yes.
this
But can they come back and ask
354,000.
for more money?
They do the actuarial valuation every year, so our rates fluctuate every 2 years.
So you
So
can
if they
end up paying
determine,
more.
yes, if they determine that we're going to need to pay more in the future, our annual required contribution will increase.
Which we know is going to happen.
Mhm.
We know that for the next time that they've already came out and said that the rates are going up, but the weird way that it works for PERS is it's on a 2-year cycle, and so we know rates are going up, but they've also had a better rate of return than they thought they were going to have, so we anticipate that rates are going to go up, and then they're going to drop a little bit. And so it's just based off of the way that it's calculated. But another thing I'd like to point out is on page 47.
And in our next biennial, we will have to budget for those increases based on
For
what we think
personnel.
it's going to be.
Correct.
Yeah.
Yeah. So I'd like to show you like the 47,
47,
yeah.
yeah.
So I'd like to show you the sensitivity of this. So part of the thing that we're talking about is that this is all dependent upon what the actuaries do and how the actuaries calculate this. There's a sensitivity analysis in here, and it's item I. And so that middle number for the discount rate of 7.5, which is what the state of Oregon is using right now, which is what PERS has picked and what the actuary is using, that's where our liability lies right now for the city of Gladstone. It's this $5.6 million. That number matches the statement.
Wow.
Yes, correct.
Okay.
But if you increase that by 1% to 8.5, then the liability is only $2,700,000. If you decrease it by 1 percentage point to 6.5, then the city's liability is $9 million. And so, as you can see, that interest rate, that plays a huge, it fluctuates it significantly, and that's one of the reasons that 3 years ago we had a net pension asset, is it's the way the number is calculated. It's all an estimate. We don't know how much that's going to be. So the biggest takeaway is the city is paying their required contribution. It theoretically will cover that liability, and then they adjust it every 2 years, and then the city will then adjust their budget and then adjust what they're paying to PERS to be able to cover that liability. So a lot of people get scared about seeing $5.6 million, and I get that, but as long as the city's making those required contributions, they are going to cover that liability.
So the $1 million question to this number then is, when will we see what that number actually ends up being?
You won't.
You never
Never
will, because
will.
it's going to keep it's getting changed every year.
As your employee base
As long as you're
changes.
still in PERS.
Yes, as long as you're still in PERS. Your
Earthquakes is
anticipate
still in
change,
Oregon.
the
As long as PERS
demographics
still
of your
exists.
personnel change, everything changes, so it would never be a set in stone number. It couldn't be.
Got it.
The one thing also too that a lot of the cities are seeing a benefit of is that the people that are in the Tier 1, Tier 2 programs, which are the more expensive ones, they're all retiring. And as they retire and then sadly pass away, those benefits will reduce that are going out. And the current employee staff now are coming in at OPSERP rates, which are significantly lower. So not only does that make our required contribution a little bit lower, but over time, over a period of time, it will end up equalizing out that liability
Those
too.
people that got those huge raises back
Right.
in, what, the 70s or 80s?
Yes,
or
those and the money
something are
match
going-
and all
going
that
away.
type
Yeah,
of stuff.
going away.
They'll
that is-
eventually go away, yeah.
Yeah, it'll eventually go away, and it will not be replaced with those same types of plans.
So we can keep answering questions on other pages. Sorry, I just wanted to kind of explain that, because it unfortunately it skews on the page that Neil was asking about, the statement of activity. It skews this net change in position, because this
Yeah.
amount is, we just plugged, for lack of a better word, we had to throw it in there, $4 million. And so it throws this number every single time. If that was not on our books anymore, these would be positive numbers, even for the enterprise funds, and it'd be a lot higher numbers.
Okay.
That's why if you're
That
looking at
answers
the,
that, okay.
if you look at the true financial health of the city, these are not the statements to look at.
No, it's the budget.
It's the budgetary statements, it's the governmental fund statements, it's the proprietary fund statements. So,
Yeah, unfortunately, it's a very, they're trying to fix it. I don't think they'll come up with a solution. They're working on changing, but they're going through right now piece by piece for updating the basically financial statement method that's being used by government entities throughout the country right now, the Government Accounting Standards Board. It's going to be a long process. Unfortunately, we're stuck with what we have right now. I don't know that there's a good answer because they try to go towards business and try to make them match business, and unfortunately, government entities are not supposed to be operating like a business. Yes, the proprietary funds, the water and the sewer, those should be self-sustaining, and the revenue should equal expenditures, and be able to, you know, cover any of those long-term capital projects that are coming up, whereas the other funds essentially should be in and out. You know, it's to support police services, it's to support fire, it's to support all these services that the city provides to the citizens. And so, unfortunately, there's not a good way to present it.
Well, why did they feel like it has to be on our books? Because, I mean, on the city's books, because
it's the
we aren't going to have
share.
to come in. I mean, shouldn't it be on PERS books?
It's on everybody's
It's on
books.
everybody's, but this is the proportionate share of the
For
city
the
of
city
Gladstone.
Is what
Everybody
they say.
has a proportionate share.
We do it to make PERS look better.
No, it's
No,
on
PERS
PERS
shows
books
it
also
too.
too.
This
Yeah.
is
But
just
they don't
the
have this
percentage.
It
number.
It's
would be included.
It's included
It's
in
included
it.
in their number.
Yeah.
Yeah, it's a lot larger
Yeah.
number.
I mean,
30 million
it seems
more.
since it's
30
not
billion.
anything we're paying out,
It's a
we've
non-current.
already paid it
yeah.
out.
It's an accounting standard that
Yeah.
requires
It
us to
seems
put it on the
silly.
books.
Oh, we agree.
We thought. We wrote many letters to
agree.
Gatsby.
I mean, that's
Yeah.
really silly
Yeah.
if it's not money we have to come up with to pay out.
Don't even get me started on implicit subsidies. You know, I mean, it's just, sadly, there are certain things like that within the accounting standards that you can't
That's why a lot
truly
of
explain.
municipalities encourage Tier 1 employees to retire, and you know, that's
Mhm.
attrition and how you change that. But it's a percentage of what our liability is, and every year it changes. But as long as we're paying our proportionate share in here, then we're keeping up with
Right, and
those
we don't have a
variables.
liability.
And that's
I
why it
mean-
used to not be on the books.
Right.
And fortunately for the city, the bonding agencies understand how these numbers work and they take them out to do the calculation. So they know it's not an accurate portrayal. So when you are going out for financing, those numbers, there's certain numbers that they throw out, and that's one of them.
Okay.
Can we go through page 43?
Gatsby 68
yes.
note.
Yep.
Yes. Yes.
Only, mostly just
Mhm.
the dates, because you talked a little bit about.
Oh,
Okay.
these are fun.
And so,
Mhm. Mhm.
So the way that GASB 68, so I'm going to refer back to that same GASB that made us put the pension on the books. So the way that GASB 68 did it is that it can be 36 months in arrears.
Mhm.
Yeah, it's 36
Mhm.
months in arrears. Because, so part of the problem is that in order for you to get these numbers on your books in a timely manner, and how long it takes for PERS to get audited, then to have the actuaries do their little science thing with it, the black box, shake it up, and then get the numbers. So we're doing these numbers based off of the actuaries' net pension liability measured at June 30, 2016. So that's why you see those different numbers. And then if you actually look over here on page 44, the valuation date was actually December 31st, 2014. And so it's the reason that they did it this way is because you would have never had timely financial statements, because it would have taken about 2 years to get those numbers by the time that by the time that the pension plan was audited, the actuaries got the numbers. They do roll them forward a little bit and use some calculations that they have in there, but that's part of the reason that it has different numbers in there, is because it's all based off of that. There's a typo where?
Oh, between the 2013 enrolled.
and that
Okay.
I think should be 2014 then, right? Or
Mm,
is that 2013?
The net pension was measured as of June 30, 2016, and the total pension liabilities was determined by an actuary valuation of December. I'll double check those numbers to make sure it got updated.
That could possibly
That
be
could possibly,
2014.
it could possibly be
Yeah.
2014 and
roll
2016.
forward then, yeah.
Yeah, I'll check that.
So basically, the actuaries came in and did evaluation as of 12/31/14.
I think you're right that it's off a date.
And then basically, or in general, and then they do a little bit more stuff, but not in maybe as much detail. They kind of roll forward
Mhm.
to get you to where you want for 16.
Yeah. And so one of the calculations, one of the things that you have to back out, so if you look at page 43, there's this contribution subsequent to the measurement date. It's in the middle. It's under deferred outflows of resources, that $354,011. That was the actual payments that were paid out for the year ended June 30, 2017. So that number essentially gets taken out, and then the old number from last year gets put in. It's like because you have to reconcile between the 2 years. So then that gets included as part of the deferred outflow of resources. So it's very, very confusing.
So I was also going to ask about the number
Yep.
starting there. It's just weird to start a sentence like that.
Yep.
with a number. Is that
That's the example from the GASB 34. They actually had us change this note. So this note doesn't exactly match last year's. They actually told us that they wanted this note in here.
okay?
Yep. So we changed it. I know it's weird to do it as a number. Well, and the funny thing is that they had us, so we used to have this table here. We had it broke down in as deferred outflows and deferred inflows. And they said no, they wanted it combined, and then they didn't want that 354 included because it used to be the total of these two numbers. Now it's the total of the two numbers above it.
Yeah, I noticed that.
And then you pull it out. And so that's a new change that they had us do. They said, you guys in Oregon are doing it wrong. We want you to change this note. And that was, they had us change that because the state was, everybody in the state was pretty much using the notes that were there from last year. They said they wanted this changed. So and that came out maybe, November. So anybody whose financial statements were issued before November pretty much had the same notes that you guys had last year. Everybody after that, we started catching it and fixing it because the federal government basically started telling us that they wanted it changed. So
I'm
I know
going to
it's a
take you
weird
back
thing.
to 15 and 16.
Okay.
So, I noticed from last year to this year on the balance sheet, the basic balance sheet, last year you listed the state revenue sharing fund, and this year it's not here, or the one is a balance sheet, and then the next page includes the state revenue sharing fund, but this page doesn't.
This is another GASB thing.
Oh,
so
okay.
if the balance sheet is all zeros, you don't list it.
Oh, okay.
So it would have been as all zero column because
Yep.
that fund was closed.
You can see ending fund balance is 0, so it meant no assets, no liabilities, no fund balance, so there's no reason
And so
to
they don't want,
put it
so
on
they
here.
don't,
Get money from them anymore?
Well, I don't believe it was closed. I
Oh,
think
it
it was
wasn't
just
closed.
zeroed
Okay.
out. This
Okay.
is the one where she moved everything out to general fund, yeah.
yeah. So,
So, no,
no,
we
it's
do
sorry.
still get the
It's
money,
just,
the
it's
funded-
just that,
yeah.
it's just the Government Accounting Standards Board
Yeah.
prefers that you do not put a column in there that just has all zeros.
We do still get the money.
Okay.
You'll see it again in this year.
I was going to say, well, it'll be back.
It'll be back, and there may possibly be a fund balance left in it unless we decide to
Distribute it.
distribute it and put a supplemental budget through to count for it.
Okay.
Jack, a curiosity question, which it came up earlier on page 76 or whatever, that $46, I caught it, I saw it again here on 16. What did we spend $46 on the civic building and
Well,
stuff?
there was far more than that actually spent.
Oh.
It was just, there was not enough revenue moved in to there was enough revenue moved in to cover everything but $46.
Okay, thank you.
So,
And so it had a
Disregard.
negative $46.
Yeah.
Negative
Didn't
bottom
count that
line.
we did all the payouts to the prop businesses.
Yeah.
Gotcha. Okay.
yeah.
Okay, just curious.
And that you'll find in this other little list of money.
Mm-hmm. Yeah.
Okay.
What other list of money?
The vendor
The vendor list.
The vendor
Was
list.
that what you guys wanted? Is that the right
Oh,
one?
yeah.
Okay.
yeah, I didn't get a chance to look through it. That's what I was
Alright.
looking for
So this was...
back when,
yeah,
last June.
So Kathy printed it, but remember Springbrook had a conversion,
Right.
so we couldn't get it all to look like this, but I think that's complete what you wanted.
Okay.
If somebody gets when this is all finished, and I'm assuming that the citizens of Gladstone can, it'll be either be online or they can
Yes.
look at it.
Yeah.
Okay. And in looking through most of this stuff, there's no breakdown of purchases. You know, I mean, you don't list every single thing
No.
that people.
Not in the audit.
But if somebody comes in and asks,
Yeah.
then you have to show them what, because if they think, what the heck did we spend, blah, blah, blah.
To a
for?"
certain extent, for the most part, that's accurate. There are some stuff that is considered confidential that you can't release individual information on.
Like payroll.
Payroll, personnel, related
Well-
things,
No.
and also...
What else?
Well,
No.
you
Um,
usually can release payroll stuff. The main
But not employees.
there is some specific things, like it's usually position that you can release and things like
Yeah.
that. There's also some specific. Are you guys
Legal
receiving any marijuana tax?
Yeah,
Yeah.
we are receiving marijuana tax. The attorney bills are privileged
Yeah.
information.
Yep.
And like that. But I think each month, and I was going to have Kathy touch on this because this is another cleanup that we're going to do for council and the public. We run a check register, and it goes in the council packet. So if you wanted to see where we wrote checks to and how much and all of that, we do that. But do you want to explain what we're going to clean up with that a little bit?
There's been some inconsistency as far as when the information's being reported. So, say for the month of March, there will be a list of cash balances as of the end of February. Well, we don't have time to truly close February, reconcile the bank accounts, etc., by the time we have to issue that March report, which is within just a couple days. So we're going to push off one more month so that the February information, fully closed, fully reconciled, fully adjusted for, will be presented to the council in April, so that you have audited information at that time. The list of checks will correspond. So we want to try and get where you're looking at the same information for 1 month in your whole financial report, rather than unaudited cash balances versus checks being issued a different month versus the attorney fees that were paid in a different month. I don't know if I'm stating that
I mean,
very
No,
clearly.
you are.
Yeah,
'Cause-
but
yeah,
yeah,
'cause-
there's been
'cause
an
if you look at
inconsistency.
those different
Yeah.
statements or
Yeah,
reports, not
yeah.
statements, but reports,
Yeah.
they don't add up.
No, they don't, you know, and that doesn't make me happy.
Well, that makes
And
two of
yes.
us.
I like things to
We
tie.
don't like it when they don't match.
So
I
we're
mean, if somebody comes storming into Jackie's office and says, it seems to me, I may not have the number right, but it seems to me that in one of these places, the lawyer fees were like $900,000 or some absorbent amount.
Right. Oh,
And
well,
so-
that's how much
so
we
somebody-
transfer to cover.
So
really.
somebody comes in and, you know, just a citizen who thinks they're paying attention, and they come in and they ask you about those fees. Do you have to explain to them why we've paid X number of dollars to our lawyer or to our auditor or
Public
to...
records request,
Can-
and if we can get the information within 15 minutes readily available, we'll get that out. We're trying to be more transparent, and even on our website, we have a finance page where we're going to put the finance statement packages each month, so anybody could go in and look at that. But I think part of the problem is that we weren't communicating how money was being spent, and so yes, that's something that we want to change, to do that. If somebody came in and said, why did we spend $10,000 on the attorney bill, I couldn't show them what we spent it on because it's
Right,
Privilege.
right.
right, but we can
But
do
you can
line
ex-
item detail
But you
and
can
all that.
explain why we have an attorney and how often, and then they have to come to our meetings and
Mhm.
what they have to
To
do.
let you know, I'm on city council, I can't even look at them.
Well,
No.
No, but I mean,
I think that's very serious. and and
To
also
know what they're doing for us?
yeah.
Well,
And that's because my other counselors have decided that the rest of us shouldn't look at them. Only Jackie. And
Well, if
and
it
I
has
did put
to do with people's personal things, that's not for anybody to share. I understand
If it has to do with personnel, I mean,
Yes.
if we're hired
Right.
a lawyer
or a
for
legal
personnel.
issue, something.
This is common. So legal, there are certain things that are considered privileged, or there are certain things that's considered confidential that it doesn't get shared typically because of the laws in the state and the rules regarding it. It's not, City of Gladstone is not doing anything different than other entities. If they are releasing that information, they should not be. Then they're getting ill advice.
We do
Well, I
provide.
was just wondering because as I was looking, because I realized as I was looking at this, purchases were all glommed up into one
It's a very
into one
high
spot.
level. Financial statements are very high level.
And you wonder why, why is it costing, why are we paying Office Depot $10,000? No, I don't,
Right.
I think
Well,
it was
no.
real cheap. But, I mean, I just,
Yeah.
and people get worked up over that. People who know nothing about what they're
Right.
doing get real worked up about why
Right.
you're paying for something
And
that they have
some
no
of those
clue.
things we could easily provide the information
can
on.
tell
As
the-
Jackie said, we could have it within 15 minutes.
Right.
And,
So
and
when
it's,
people
Well,
are,
it's
well-
no problem at all. It's
Yeah.
just that level of confidentiality we have to be careful with. We
Well,
can't
and-
cross.
One thing too is the U.S. Bank purchase cards. We've gone from about a year and a half, 2 years ago, $6,000-7,000 a month to I want to say last month because I'd say recent in our last packet it was $39,000. Now I understand that it's easier. At least my understanding is it's easier to keep track of those purchases using a purchase card, but when in just a couple of years, it's really gone up a lot, and certain people can't look at them, like me.
Well, and that's where we differ, and Neil and I know we differ, but we have a credit card purchasing policy, and we have internal controls in place on who approves who buys what. You just want to know what everybody
Well,
is
we spent
charging
over $1
to their
million
card.
than we were supposed to. Yeah, I want to know.
That's what you have a city administrator for. You hold me accountable to
Well,
those.
but they take
They mean-
those, if somebody spends $6,000 a month on a card, they separate it into all these other
Yeah,
expenses.
it
Right.
comes out of line item
It
detail.
all comes out on the line item. Nobody's just spending $6,000 on a credit card for fun. I mean, they shouldn't be anyway.
Well, shouldn't
The
be.
same
is right.
accounting applies whether it's purchased on a P card or whether it's
Right,
purchased at individual stores.
Except that the people don't
yeah.
know what that
Yeah,
is being spent.
Well, it's available information.
There you go, Neil, it's available information.
Sure.
Well, it is, I mean, I would think because it's easier to put things on a credit card and then the bookkeeper or accounting person can separate them into the right accounts.
Yeah, so
Other
like
than
for instance,
100 little receipts every month.
So I-
if Lauren...
Well, we do
the-
collect,
I
you know,
know.
and we do even collect all of the receipts. There's
I know.
It's not uncommon, it's not uncommon. A lot of entities are moving from writing checks for everything
Mhm.
or having petty
Exactly.
cash, which is how they used to pay for a lot of those things. If you have public works, water, sewer guys out there and they're in the field, a pipe's broken, they need to get it fixed, they need to run to Home Depot, they used to have to come back to City Hall, get petty cash, then go back out to Home Depot, then have to bring the receipt back.
Mhm.
And so
The efficiency.
the efficiencies by P cards is a lot greater, and so we're seeing this across,
Right.
and there's a lot of controls around P
As long
cards.
as it's 3 months.
Yeah.
if you
Well,
can.
and like I say, and I don't
I'll buy
disagree
you
with
one,
that.
Jackie.
It's just the oversight that I'm concerned about.
Well, as a banker once told me when I initiated a P card program that was quite large, and he said it's only as good as the controls and the policy that is behind it, and that is what makes it work.
Well-
And so if you have a good type policy and good type controls, it's going to work just as well as any other payables type system, and you gain efficiencies and you save a lot of money. And on many of them, I'm not sure with the U.S. Bank, but the one that I was affiliated with, we ended up generating about $80,000 a year in revenues, rebates back to the entity. So it was
So when
really
you say
good.
controls, does that mean the person looking through them and making sure that...
It's the authorization level.
Because you can have all the policies you want, but if they're not followed, is
Right.
that...
It's
is
how
that
the
where
policy, it's how the
that's the control
policy is
part?
written, and then it's the authorization levels that are embedded. And if those authorization levels must be followed as far as what their spending limit is, how much they can spend on any single transaction, who is approving if they overspend that or need to spend over that, etc. You can set in very tight controls. And that's one of the things that the auditors do every single year. They come in and they test those internal controls on that type of thing, and especially in a situation such as P-cards.
And I've only caught fraud in it in one instance.
And you'd have to be working, you and her would have to be working together to make it. not-
Well, you mentioned the lady over in West
Yeah,
Lynn.
but that's 'cause nobody, I mean, you're
Whoa,
getting...
hold, let me finish.
That was a different
There's also
Yeah.
a lady in Milwaukee, in Estacada,
Oh, I know.
and two out of Clackamas
I have
County
two,
in the last 5
I have
years.
two clients because their previous bookkeepers got...
Right. Yeah, and I'm talking
Stole
about
money.
just government
But-
agencies in the last 4 or 5 years.
But when somebody I mean, it's the easiest way, and somebody watches it, I mean, like, I assume it's you, or you have a clerk that
Mhm.
pays attention to
Mhm.
it, and somebody, and they tell me, you're getting a notice of what's being spent every month in your packet. That's what you just said, right? That
Do a check run every month, so,
Right.
I mean, you know where the checks are going, what the...
and you know what
Right.
accounts they go into?
And we get department
no, we
reports,
know.
monthly
I
reports.
should have brought a
are in there.
report.
Wow.
That last one you did last month was just peachy.
Oh.
Nice and readable and everything.
Right.
One
Yeah.
thing I do want to point out is this is historical, and this is June 30th, 2017, and so it was a different administration and
Right.
different,
Yes.
Right, different
finance personnel.
person and city administrator,
Yes,
right?
yes. And so I want to point that out, that I think that things are going to be better going forward, and I think that things have been put into place going forward to help. Unfortunately, at this point in time, this is what it looks like. So,
Is this public information?
Yes.
Yeah, this is being videotaped and recorded, so this meeting will go online, but, I'm glad. We need to be talking about this in public, so.
Like,
I mean, the city is
I thought you
financially
said that-
healthy. It's the poor
Yes.
management of how we budgeted and spent our funds that we need to correct.
And honestly, when I look at some of the stuff that's the overage, it has to do with not holding the vendors or whoever we've signed contracts with, holding them to task at coming in within, their reasonable amount of money that they've said it's going to cost to do a project, and have clearly gone over. And like I said, I go to city council meetings. I never heard one time that one company was going to be $82,000 over. Because I'm sure there was usually...
Well, and we'll check on that, because it may have been how they were paid. and
Right,
how it came
exactly,
out.
exactly.
So-
yeah, it could have been a
But
timing
to that
difference.
point, nothing was said at city council meeting, 216 to 217, that the company that was supposed to be putting the website together didn't know what they were doing.
Yeah, that was.
Well,
Jackie came forward with that.
Well, no, but later,
Yeah,
but I'm
but
just
not-
saying,
oh.
people kept asking, what's going on, and...
Well, that's
They
because they
were-
were putting their addition on their house in Canby.
Want to do a time check? How are we doing?
Yeah.
Yeah, I don't know how many other questions that you guys have or comments.
The one thing that maybe we could touch on real quickly is the city got a GFOA award for their budget. And that may come up next week too.
What is that?
Well,
So, GFOA is Government Finance Officers Association, and so,
I'm sorry, this is trying
yeah.
to, if I could get that.
Sorry.
Quick, I apologize.
No, the Government Finance Officers Association is an entity that gives out awards for financial statements and for budgets that are presented according to some specific rules that they have come up with, and they're a higher standard than just the standard budgets. And so the city received the GFOA budgetary award for the fiscal year 17 through 19, the biennium. It still doesn't follow Oregon budget law
How do we get it then?
because it's a national and it's based off of national requirements. So there was some focus on that versus some focus on financial stuff, in my opinion.
The GFOA also issues a comprehensive annual financial, you can prepare a CAFR, comprehensive annual financial report, and submit that for Excellence in Financial Reporting Award, which is a very, very good award to have associated with your financial reports. The CAFR is a very high standard report. It has increased information in it than what is presented in these annual financial reports. It can help you with your bond ratings. It is a very
Rigorous.
Procedure to go through. So my goal would be, or whomever ends up here after me, would be to go pursue the CAFR. That Excellence in Financial Reporting is more critical than the Distinguished Budget Award. The Budget Award is nice. It means you're putting a lot of pretty pictures and information in your budget, and it's a good thing. It's not a bad thing at all. This is what we really want to focus on, though, in having the accuracy and the extended
Are you going to tell
information.
people about that? Will it be on our website, our city website, or in our newsletter?
Which
mean,
one's
about
which
the
one?
distinguished
That we got
budget?
the distinguished budget? I mean, people
Well-
think we're not doing anything.
Well, no, but the thing is, it's...
It's a good
Yes.
thing. Yes, it should be publicized.
But,
Yeah.
I mean, it's like the police department getting the Oregon Accreditation Award a few years ago when they didn't meet all, half of the 102.
But did they get the award?
Well, yeah, because it cost us $5,000-$6,000, but
Oh,
we
wow.
didn't earn it. It wasn't worth the papers
That's
printed on.
right. Yeah.
Just like this one, and I disagree with you. I think that when you got city council that is hamstringing other councilors in getting information, we don't deserve that award.
That's not one of the requirements, so.
Well, that's why I put it in there, and I don't
yeah,
think
yeah.
the budget award was
Mhm.
was justified either.
But don't you want the city people to know that we have gotten
we
good things?
did already publicly talk about it at a council meeting, and it was in our newsletter, so, but I
It's in
just
the
wanted
newsletter.
you guys to understand there is a difference between the budget document and the audit document. So,
So there's changes to be made in this book, clearly, but, so what happens now? Or, do you have more questions? Sorry, Neil, go.
Oh, we could be here all night.
I know.
Go ahead. Actually, a lot of this, since we've been talking, I've been thumbing through and have been answered.
so this group needs to collectively decide if they want to recommend that the city council accept it with the amendments that you have all proposed tonight. I'd like all of you to be there at the council meeting next Tuesday night, and Tanya's going to do a presentation, but all of you are welcome to speak as well on your concerns or comments that's
City Council, I
encouraged.
have it on there, 6:30?
6:30. So Tanya,
And we-
unfortunately, would have to make the changes real quick for tomorrow to put this in the council packet.
Correct. So I am going to take back the copies that I gave you that don't have the draft stamp on them, and the reason why is because we're going to make the changes, and I don't want that copy to accidentally get out in the public.
keep this
You
one?
can keep the urban renewal because there will not be any changes to that one.
That one says
So,
draft,
so if
okay.
it says draft, you can keep it.
Okay.
If it doesn't say draft, just because I don't want it to accidentally get out there, because we're going to make these changes that are,
When I first got here, you were talking about bids. What's the minimum amount?
it's different for each entity.
What's ours, do you know?
Bids for what?
Oh, you were
For
talking...
ORS 279,
Sure. I don't remember exactly.
got here.
Contracting?
You were talking
Was it
about
con-
the bids, yeah, for contractors,
Contract, yeah, I believe so.
for part of the compliance?
Yeah, I don't know what the city's policy is. I cannot remember off the top of my head. I'm sorry. Every city's a little bit different.
Generally, 10, 15, I
Oh,
have to
okay.
go out for informal quotes.
Right, that's what, yeah, for...
10,000, 15,000, and when it gets up to 25, then we have to do a formalized process for
Mhm.
that.
We keep our name tags and bring them back.
Somebody gave me back, oh no, maybe that's my copy of the urban renewal.
I'd be happy to store them.
What was the question?
I
Sorry.
just said, do we keep our name tags and bring them back next time we meet?
So-
And I guess I'd like to know what the procedure is. How often do we meet and how does it work?
Well,
Well, we can certainly talk about that, and I encourage you to get involved with the budget process too. One of the things Kathy and I will do as soon as this audit is accepted and complete is get ready for talking about how is our first year in the biennial budget going, because we want to stay on top of this. And so, you know, from an audit perspective, really just once a year is what this group meets, but there are other ways to get involved.
Usually
it
you
twice?
meet twice. Usually you meet at least twice. So usually you meet at the beginning of, like, usually before interim, so that if there's any concerns that the audit committee has, and then if anything came up in between the time that we meet, then you can always get us together.
so you're talking about like in the fall?
No,
No.
typically we last year I think we met in May.
You guys said you met once before.
May or
Yeah.
June.
Yeah.
And that could be, if you did interim in April, it might have been,
Well, I think
might have been a blur.
I
but,
don't remember.
yeah,
I'm
but it
sorry.
could have been usually
Every
it's
audit
prior
committee
to
every
interim.
audit committee is different
Yeah.
too. So typically we would do it like around interim, like about the time that we're starting the audit. Usually it's a little bit before that, just so that if we need to make any adjustments to our audit plan, we like to have the audit committee's input. So if there's anything specific that you know, we do a risk-based audit. So it's based, I mean, there's certain things we always look at. We always look at cash. We're going to make sure that cash is confirmed with the bank, that what the city says they have in the bank is what is actually in the bank. So there's certain procedures we always do, but then the rest of it's a risk-based audit. So it's like, you know, if somebody has a concern, then we'll go and look at that typically. Or so there's different ways that we approach the audit. Obviously, if it's something that's immaterial, sometimes we won't look at it. But we'll typically meet then, and then typically we'll meet after the audit is completed. And then unfortunately, just this year, it's way later than it normally is. That won't happen again.
What is the normal timing?
So it needs to be completed by December 31st. So the requirement of the state is that it's finished by December 31st. You can request an extension if something goes awry, like what happened this year. And so that's we're still in compliance. The city has requested extensions to, you know, and then our last extension is up at the end of the month, and so we'll meet that deadline because we'll be turning this into the Secretary of State tomorrow.
So you turn it in before it goes to council?
Well,
I'm just asking. I'm not accusing her.
so no. Typically, yes.
Oh, okay.
So typically, yes, it goes to, it doesn't have to be that way. Typically, so what we will actually turn in is we have a report that has to go to the Secretary of State, so that's what we turned in. The financial statements the city will turn in, and it just has to be done by the end of the month, so which can be done afterwards. So
do we want to meet in May?
Let us schedule the audit first,
Okay.
and then we'll, then we can poll you guys and see when you are available.
And just so you guys know, and I haven't shared this with the full council yet, but Kathy is, she's retired, and she's very, very experienced finance director. She helped out West Lynn for a year. They brought her on, and they wouldn't let her go because she's very good. So right now, I'm paying her as a consultant, which means that we don't have an accounting manager where we're not paying full wages and benefits. So I'm able to use her Tuesday, Wednesday, and Thursday. She is going to stay and help with the civic buildings financing, and she's going to do our financial statements this next audit. So she will be here for an undetermined amount of time. I'm very excited and satisfied with the work she's doing, and so to have her through this next, cycle, I think is going to give us the stability that we need so we can assess to determine what level of accounting manager do we need on a permanent basis. But if you look statewide, finance directors are in a very high demand, and it's very hard to find qualified people. And when we created this position, it really was more like a mid-level accounting manager position and not a high-level finance director position. And for what Gladstone has going on right now with the 3 civic building projects, we need somebody with Kathy's expertise. So she will stay. Yep.
Yay.
Oh, thank you.
That makes Jackie's job that much easier, and she appreciates that.
Wow.
And then we like it when Jackie's not.
Yeah.
It's a waterfall.
Okay.
Okay.
All right. Well, we'll adjourn then.
Thank you.